All right. Good morning, everyone. Happy Tuesday. We're going to get started here in just a minute. We've got 6 watching right now, but when we hit about 15 to 20, we'll get started.
Good morning, guys. We'll give it another minute or two for any stragglers here. We say we start at 9:30-ish. Sometimes it takes us a minute or two to get our act together, but we're good to go. Got a lot of good content today. Interesting times in trads. I think the market will be some volatility today, but I don't think you never know. But with the Fed meeting coming up, moves may be somewhat muted as big money will want to wait and see if they don't already know. There's 11. All right. Well, why don't we go ahead and start? All right. So guys, appreciate you being here. Hopefully you get a little something out of these. I just like to kind of do this little intro here a bit. Pardon me if many of you have heard this many times, but what we're trying to do here, so members will submit their content, will submit the assets that they're interested in, that's on their watch list. And we do it for a couple of reasons. One, we get to kind of, get an idea of how they're progressing with our methodology. Most of the people that will post in here have been with us for some time. They have a lot of confidence in their TA skills. And so rarely is there something here that I need to make a dramatic correction to. And we encourage people to post regularly, as that's how you get the maximum value out of your membership. So you're going to see, some good content here. But the other thing is I remind you every time we do one of these, this is a great way to look for trade ideas for setups, because often these will be at or very close a potential entry point. So it's a real-time scan of hundreds of people approaching the market through the same technical lens, looking for the confluence of what we try to teach, which is the fib relationships, the algo relationships. If there's an Elliott Wave pattern there that can add value, we'll include that. I think we have a bit of a reputation as being Elliott only, and I as much as I try and de-emphasize it, it seems to be what people think of when they think of us. But I remind you, it's always third on my list of priorities. If there's an Elliott count, this is always the big if. If there's an Elliott count that's adding context and gives us some additional value to where we might anticipate where the probabilities would lie, we use it. If it's not there, we just wait until it shows up. Eventually, there's a count that will show up. It's just the I mean, you can call it the brilliance of Elliott, or you can call it the curse of Elliott, right? But one way or another, there's always a count that will reveal itself with enough data. So now this is a good start. So this is a member who's been with us for some time, and he's really made great progress here to where I almost never have to modify anything on his counts. But what he does that's unique to him, and I think there's a handful of members now that are seeing this and starting to include some of this, is he puts on a harmonic on top of the Elliott count. So if we zoom out here, and you can kind of see what he's doing here. So this is lows. I should mention that. We're on a 2 hour here on lows. So we can see coming, oh shit, it was this, that's COVID low. All right, so here's our COVID low, 1, 2, 3. This gets a little tricky here, but you'd likely have to go with this as the ABC that gives us our 4 here. Although the whole thing, the trade-off would be, okay, if it's not 1, 2, where's your 1, 2? So you're kind of forced into this, even though it looks more like a 5, right? So I suppose you could probably do it this way. This is such classic 4, right? Where we go sideways, right? So we get a tiny little 2 here, which is cryptos, or pardon me, I'm so used to Bitcoin. But we have this tiny little 2. So your first thought is here, well, if I put the 4 over here, there's a lack of time relationship here. This is already more dramatic than this. This essentially you'd call the sideways, and then here's your sharp. So you get the alternation here. But you're probably kind of stuck with this. So you'd have to go A, B, you'd have to go A, B, C to get that to play. So now listen, there are times where with Elliott, there's a little bit of a force fit. It's not perfect, right? So that's the thing. When people are new to Elliott, sometimes they're assuming, well, every pivot I'm going to be able to see the 5s and the 3s perfectly. Well, that's pretty hard to squeeze a 5 into there. Now, could you do it? No shit, probably. You probably could do it. Let me get over here. Could you get that into a 3? Well, let's see if we could do it, just out of curiosity here. Since we already up to 30 people. Could you do it? Yeah, you could. God, it ain't great. Oh, here on a 15. So this is where going down to a lower time frame can at least give you a little more confidence. That looks like that's tight. Looks like that's going to be really close to a double top. I mean, you'd call it a double top. 1, 2, 3, 4, 5. So you can do it either way. A, B, C is how you have to do that. So we started on a 2 hour, but by going down to the 15-minute, okay, I can make that work. And I don't feel like, oh God, I'm just squeezing that in just because I need it. You gotta be careful about doing that. But there are times where you're just going to make do with what the market gives you, right? The markets are not perfect. Elliott Wave is not perfect. But is it giving us some value? And the value is always, you'll hear me say this a lot, is that it gives us context as to what came before that might influence what's likely, not inevitable, what's likely to come next. Well, if we work with this as the 4 and we go 1, 2, all right, okay. Well, I can see, often with Elliott Wave, particularly with impulses, you work backwards because, if we topped here, okay, well, that's got to be the 4, that's got to be the 3. Right. So we're kind of stuck with this, even though that is this classic 4 stuff, but you need it, right? So you can go, oh, all right, okay, it ain't great, but I guess I can go A, B, C into the 2. I get my big 3, 4, 5. So I complete an impulse up here. Now, what's relevant to this is that you say, okay, well, if I've topped up here, I've got a pretty significant top. I got the 5 of the 5 of the 5 of the 5, right? 5 of the 5 of the 5, right? Coming off of the COVID low. That's not insignificant. Now, with this volatility, and all of a sudden, everybody's a little concerned about what's going on in the relentless bull market. Do we have potentially now a more meaningful correction? Well, just right off the bat, just looking at this, you can just, you don't have to overcomplicate. Right? We're just kind of going sideways here. We're not progressing the trend. We're really not, threatening new lows here. I mean, you can pull this whole thing over and say, okay, well, I can sure see where the support's going to come in. Now, let's fatten that up a little bit. Now you see how he's constructed the trade to take advantage of this. If the Elliott count plays and we end up here with your classic 3 coming out of correction, and there's absolutely nothing says that has to stop there. You just got a reasonable target. What's so consistent about what Grant is doing here and the way he approaches every trade that he posts in here is that there's a trading plan here. So he's defined the TA here so that he has a reasonable probability here that we've got a pivot high in. Now we have the harmonic here. This is a shark, which is, I think it's the newest one. I think it's the latest one that Carney came up with here. So you get the shark fin kind of idea, and all of them are just a variation on what the fib relationships are. But the reason that they have significance is that you've got 4 pivots that are all related to one another via those Fibonacci swing relationships. So it's just giving you one more point of confluence. I would tell you it's not essential in the same way that Elliott Wave is not essential to be successful. It's just one more tool that we can add to this. So you see, this is how a professional approaches the market. I've got a pivot here of which he is now committed to, and this is an important distinction. You're committed to the idea that the pivot is in, which means you don't touch those, and you don't go, well, okay, I'm going to give it a little more room. Right? I harp on this a lot because that's the single most common mistake that new traders make, or not even necessarily new traders, traders that are lacking consistent results. I often, because they'll write me and say, okay, here's my problem. I got blown out on something. I didn't want to get stopped out. It's a little bit of ego that gets involved here, which I can completely understand. I hate getting stopped out as much as anybody, but you have to make peace with it. It's the thing you have to be careful of is going, well, maybe it goes a little higher and it's, a bat or a butterfly or something, maybe because I don't want to get stopped out. Right? You got to be really, really, really careful about that. And you can, and in actual fact, so first thought in my head is, well, you might consider an option here. So if you wanted to play the short side of this, there's no shortage of different approaches you can take in the option markets. They're just another set of tools to create your directional bias. Or unlike the underlying market, we can take a position where we're neutral, we're direction neutral, and we're just selling volatility. That's really a conversation for an entirely that's a whole course unto itself. But if you wanted to keep it simple and you just said, all right, I'm going to take a shot at a put here. Now, the advantage here of where you can kind of keep it simple is the market's been rallying up into that pivot. We know that the out of the money calls are likely to be more expensive, and the puts are going to be less expensive, not necessarily inexpensive, but less expensive, because the delta of the options, right, as the market is moving higher, the retail will say, oh, it's just going to keep going. So they'll buy the out of the money calls. Right. So they have no intrinsic value. They have only time value. And that's what the public likes to do, which is why 90% of options that are purchased expire worthless. Right. 90%. So next time you're about to buy an option, keep that somewhere in your little filter of trading reality. So now, why do people do it then? Well, holy shit, if 90% expire worthless, why would anyone ever buy one? Because every now and then, you say, why would anyone buy a lottery ticket? Because every now and then someone's going to win. And every now and then the out of money options, there could be a whole lot of reasons for it, or there could be you're tracking unusual activity. But those kind of things, when you're buying an out of the money option, you're essentially buying a lottery ticket. You're on the assumption that in the time that I've got in that option, I'm anticipating the market's going to rally dramatically to where that option, which had no intrinsic value, might at least appreciate in value and eventually may have some intrinsic value, i.e. as in the money. That's why people do it. It's the lottery ticket mentality. Very rarely will you find professionals that will just straight out buy an option, unless it's a hedge. And I'm sure there's been some put buying with the volatility in the market, right? People are just hedging their portfolios. So it's something to keep in mind. But here, if I'm trading this, all of that, as I kind of digress into the option trading idea here, is this is a great risk reward scenario here. So what do we got here? There's 8 to 1. So we got, that looks like a little over 3 to 1, 5 to 1, 8 to 1, all with the same stop. So you can see it's like a campaign. Okay, I've got target 1, target 2, target 3. If I get target 3, I'm working with all the tools that I have available to me. So I have the combination of I can see a completed impulse here. Now, so what am I looking for? I'm looking for a 3. Now, nothing says that couldn't go much lower, because if we put that in an Elliott context and say, well, if we completed an impulse here, we'd be anticipating a much deeper, here I got the wolf range on, but give me a second. We'd be anticipating a much deeper retracement, right? That's where we're looking for a 2. Again, nothing says it has to come down here. It's just statistically, if we look back at, I don't know how many gazillions of wave 2s, probably couldn't even put a number on it. This is where they tend to go. Now, would that fit with the geometry with them? Well, certainly all of this is going to be support. That doesn't mean it can't break it, but you can just kind of look at this and go, all right, okay, I can kind of see the upper range here. And you can understand why he's limiting his target. Now, if he gets 8-1 off of this, so he's got a 3-1, 5-1, and 8-1, and he gets that and it keeps going, is he disappointed? No, because the goal is not, see, that's the mentality of the guy who's biting the out of the money option up here. Oh, I think it's going to go there. Now, granted, that's the target relative to this 50, but that's why they do it, right? Oh, it's the lottery mentality. Here, you see a professional trader coming at this with clearly defined risk reward that's all favorable, all tied to this single pivot. So the commitment has been made. It looks like he's already in. The commitment is made. That's the pivot. And if it's not the pivot, you take the small stop. It's that simple, right? And it seems like that would be like, oh, duh. Why do we have to even talk about this? Because it's the single most common mistake people make. That's why it's counterintuitive. You'd think, oh, duh. Okay, I'm not going to move my stop because I don't want to lose more than that. But as you get closer and closer to it, the temptation to do it is overwhelming, right? You really, it's a practice discipline to not move that stop. I'm telling you, it takes people years to get there. You'd think like, okay, I got it. I'm not going to move the stop. I mean, not a week goes by that I don't get a sob story about somebody who blew up their account because they moved a stop. So I emphasize that to try and drive it home. All right. The purpose here is, in addition to, okay, here's some good setups. Well, maybe I can pass along a few things that I've learned over 30 years of doing this. And moving your stop is the single most common mistake that new traders make. And it's not necessarily new traders, as I said before. That's just people who are not consistently profitable. Often, if I ask them why, what do they think the reason is? Too much risk, traded too big, took a loser, and then I was trying to make it all back at once. I mean, the very, very common issues in trading. It's, I will often tell people that the mechanics of trading is the easy part. That's the fun part. It's the solve the puzzle, right? Can I solve the puzzle, right? We're giving you a lot of different components here to try and solve the puzzle, right? So if I get this, oh man, I'm all dialed in. There's the pivot right there. It plays with the Elliott count. It plays with the harmonic. I get a corner pocket here. I got a target. I can see where the support and the resistance is. Like all of that leading into the idea that there's the pivot. Now, does that mean that is the pivot? Of course not, right? But as a trader, we don't get certainty. We get probabilities, and then based on that decision, okay, I've decided that based on what I can see here, that's the pivot. Now, can I put together a trade plan? So you don't go all in here, right? So again, this is how a professional would do it. I'm not going to go all in here and just try and get my 3-1, and I'm going to overtrade this because I feel pretty good about getting to that. Here, you could do it this way. You could look at it and say, oh, I feel pretty good about getting to that pivot. Right? Well, lo and behold, that's his first target. Right, because you can just look at it, right? It's not that complicated. Oh, where's the last pivot before it went down? Oh, well, that seems like a reasonable spot for the first target. Well, if I get past that, what's next? The 618, right? Where's the most? Because right, where's the common retracement point? Right, 618, right? Because it certainly could do that. Nothing says it couldn't do that, right? Of course it could do that, right? There's going to be an algo participating there. They're going to have a target right up here. Very easily could do that. Now you say, oh, I took the stop. Now, is that the pivot? Are we going to have an expanded B, or do we have to change the count? But then you making a completely independent decision here because this decision was incorrect. The decision to commit to, well, pardon me, I shouldn't say it that way. The deduction here that I've got a good pivot here, this is a hard pivot. Once you commit to that, you stay with that. Now, if it happens that it goes up here and we have to relabel the whole thing, well, this now is no longer relevant unless it's part of the overall count, the context here. Now I make a decision. Would it make sense to do that same thing and move these up here and make that same game plan? Different targets, of course, right? Because we got a new pivot. This is really well done. So is this something to be looking at today? Well, if you're looking for a trade, that's as good as any you're going to see. I mean, certainly Lowe's is going to be right in the midst of any change in Fed policy, right? As we've gone through this just unbelievable housing boom, where I mean, I can tell you here in Austin, it'd blow your mind, the appreciation of assets. Just owning property here is a good place to be, right? But that's not the same all over the country. But as people have now, gone through this, well, we're all going to stay home and we're going to fix up our homes and we're going to buy homes and we're going to fix those up. Lowe's will be right in the middle of that. So if there's any change in Fed policy, you can expect this to start the retrace. I mean, is it overvalued? Well, what did we do? COVID low, we went from 100, and what's our high up here? We went from 215, right? During the COVID experience. Now, are we correcting all of that? In some respects, the correcting seems like the wrong word. Like, did we we're too far, now we have to correct that. Well, that's why I'd like to call it a retracement, right? So which makes sense, right? So the people that caught this now, as we start this retracement, oh, okay. Well, now all you're doing is just kind of, it's not that the bull market is over. You're just looking for a better entry point. So the play here really, and I'm sure Grant would approach it the same way. You're trying to trade it down. Now he's not going for the 50. He's just going for the obvious structure because again, he's going to get 8 to 1 here on his final piece. We get this now you'd reevaluate down here and say, well, do I like it here? And as you'll hear me say all the time, I wouldn't just be sitting down here with a limit order. What I'm going to do is say, okay, show me the reaction. Now I'll take that one. Just the same thing here. You see this now, I mean, he's putting a stop right here. You had a choice, right? You could put it here or you could put it here, but he's committed to the idea that pivots in. So if I zoom in there, we can see, okay, well, I got the little reaction. It's got exactly what you're looking for. So if you're not in this trade and you're looking for a trade, this is a damn good one. Hang on, let me get that out of there. Okay, so this is exactly as I tried to describe it to you guys. Okay, there's the reaction. Here's the retrace. Now, if this is going to hold here, you take this trade right now. Right now, you take that trade. Right? If you get stopped out, okay, well, here we define the risk. Here's your first target. Right? We come down here. Okay, well, there's the obvious pivot that we looked at relative to. Right? Here's that first target here. I got to tighten that up a little bit. Right? He's even going for that right here. Right there, right now, very tradable. I mean, even just the fact that it's popping up a little bit is good news if you're looking to buy a put. You don't want to buy the put down here. They're going to be a little bit more expensive. On the retrace, now I'd buy slightly in the money myself. But I don't want to get eaten by time decay. So if you know how to just basically buy a put, right? That's the anticipation to come out of there. I'm looking for 5. So in actual fact, I'm expecting the thing to retrace. So which is why you don't want to buy it here, right? It's already starting. See, if this is the pivot, I'm expecting 5 to come down, A or 1. So why would you buy it on the first swing down right into support? Why would you buy the put right here? Oh, it's going good. Okay, I'm going to buy the put there. Well, now already puts are more expensive if you're talking about at the money puts. Now I get a little retrace. Oh, little retrace here, and the price of the puts backs off a little bit. What happens to the calls, right? People say, oh, I know what's happening. We're going to just go straight up, right? We're going to go from here. Now that's why out of the money calls are bought. No intrinsic value, just time value, right? So that's why you got to be careful there. So you could be right about direction, wrong about time, still lose money. So I don't know how I got off on options here. I didn't really mean to. I was an option broker for about 10 years. So it kind of go there in my head relatively easily. And I know many of you that may or may not be something you've got any experience with. It's not, you can make it very complicated, but just the basic buying of puts and calls is relatively straightforward. But if you get nothing else out of this, Jesus Christ, I've gone 10 minutes, 15 minutes on options. If you're going to buy an option, buy at or slightly in the money, and don't buy it in the direction that it's going. Which is just like we'll talk to you guys and say, look, we're retracement traders. So I don't want, when it's going down, I don't want to sell it. I want to sell it when it's retracing on the anticipation that's going to continue to go down. Right. Another very common mistake people make. Oh, it's going down. Well, I better buy some puts. No, that was not the time to buy the puts. The time to buy the puts is when it was going up. Right. So I guarantee you got a lot of hedging going on in the markets right now. One, the uncertainty of the Fed, although is there any uncertainty? I don't want to digress into that. My point here being, when the markets are going up, right, and you think, oh, but it's nothing but blue sky, nothing but higher highs are coming, that's when you get protection, right? It's not when, holy shit, the market's starting to crash, I better buy some puts, because you're going to overpay for the puts. All right, well, I guess I did enough there. So it's great work, Grant, as usual, but I want you guys to see this. This is a campaign with a distinct entry point. Right. Great time to enter. If you looked at this like, oh shit, well, I kind of missed it. Nope, you didn't. Now it's actually the time to do it. Right. Hard pivot here. Although with him, you could actually, I think these are locked. If you're taking it now, you could do it this way. Okay. Now my stop's here. You still got that same risk reward, but now I'm going to use this as a pivot. It looks to me like he was using the high. He's using the high here. I think when I zoomed in, I saw it a little bit better. So he's allowing for a little bit more up here. Oh God, do I get that? A little bit more could come up here, because that wouldn't invalidate the shark. The shark would just move over. You'd still have the shark. Well, 887, you probably got a little squish in there. But see, there's the fib number. Right, we've come back to the 887. We get the pivot. So this is just giving it a little cushion. Really, now if I was taking this now, I'd do it like that. Same thing here. Do the same thing. So the trade has changed a little bit because we already have the reaction. Right? Do you see the confluence here at that 887? Nice. Okay, let me keep moving here because I tend to go too long on each individual one. All right, what do I got next? I got, this Grant F was asking about the VIX. And so I brought this over up here. Monte Crypto and I were just prep this because he was asking about how to chart the VIX. Well, you wouldn't chart I've got a weekly here on the VIX just to kind of make this point. You wouldn't chart this like you would a traditional asset. This is more ranges. So it's if any of you day trade the S&P or the YM, it's a bit like the TIEQ, where we're looking at extremes here. It's the extremes that you want to be looking at. So here, what are the a great, pretty easy example here. What are the extremes here? All right, these are our two highs. Okay, well, the extreme in the VIX, well, that was the 08, 09 crisis. Here's COVID. All right, here are the lows here's the lows where, oh my God, the market is only going to go up, right? It's all it does is go up. Now, the market does have a natural bias to go up, right? It always wants to go up. So you have to recognize that. The natural flow of the market it wants to go up. So for when the VIX is this low, that would mean that the market is just relentlessly grinding higher, right? We can see, well, oh shit, what's that? Weekly here, that's 17. Now, these spikes are where you want to look at perhaps trading some VIX options. Shit, we're back in options again. I don't mean to go here, but that's kind of how you would trade this, because you can trade the VIX options and it's really just a hedge against volatility. But you wouldn't be in here saying, oh, well, where's the algo swing? Oh, there's the 50. Not how you would approach it. You're looking for the extremes, right? So when you get up here, it tells you that the market is completely freaked out, but this is just as extreme, right? Anytime you get up here, oh shit, I mean, over really the norm, you would put the norm would be down here. I mean, even that is kind of high when you're getting over 30 or when we get below 10, those are ranges. And all you're doing here is just playing probabilities, right? So it's a reversion to the mean, so which is why I had the wolf range on, right? So here's the extremes. I mean, you'd take it up to here. Right, if you want to include the extremes, here's your halfway point, which is exactly how I look at the TIEQ when I'm day trading in the futures market. Right, where's the extreme? Right, that's why I want to sell it up here. I want to buy it down here. Same kind of thing here, Grant. When you're right in the middle, you have no advantage. It's at the extremes. It's how you would trade that, and I would trade it with options. Right, so depending on how long do you want your insurance policy to be in the market. So hopefully that helps. If you need more, Grant, just send me a DM. Okay, let me keep moving here. I got INO. Okay, so I got Pizza Man. I got two things here. Okay, so bear with me, guys. Here, let me bring this up and get this on. Yes, I want to leave that. INO. Oh, okay. Oh, shit. Okay. So Pizza Man is another very skilled member. Has been with us for some time. So you're going to see good work here. As soon as I see a chart like this, I'm already pleased because I know he's put the work in. So give it a second. It'll pop up here. All right. So well, shit. You give me a 1 hour. I got to pull out just so I can see what the hell's going on here. I know it's always easier when it's your own chart, but when I'm looking at it, I got to see what the hell's going on here. All right. That's a lot of stuff. That is a lot of stuff. Okay. Holy smokes. Pizza, man, you're killing me here. All right. Let me see what I can make out of this. Wow. That's a lot. Okay. So I work up. Jesus, I got to go to a daily to figure this out. Okay. Here we go. Okay. I see what you're doing. You're pulling these channels down. Well, this is a candidate for log scale, right? You've got the range. It might help just kind of dig it out. All right. So first up, right off the bat, note how every swing is accounted for, right? This is good work, right? So he's been studying with us for some time, right? I don't need to counsel him at all. But so what do we see here? All right. So I can see the 5 that goes up. Now it's a little tricky. 2, that's a little tricky, but that's your basic impulsive structure. It's just a little tiny little 1, 2, but you're kind of stuck with it. Because you need, see, from this 2, I need that impulse here to give me the 3. So I can just look at the range and go, well, that's a good candidate for the 3. Now, if I work backwards, can I get an impulse in there? Right? Because that's the qualifier that you're constantly trying to identify. Oh, if I'm calling that a 3, well, I have to have an impulse in there. Right? It's not optional. Well, I mean, in a diagonal, right, you have an ABC. But if we're talking about an impulse, I got to go 1, 2, 1, 2. 1, 2, right? So the only thing he hasn't labeled is the internal impulse that's right there. Oh shit, that's going to be a little large, but let's go all the way down here. Okay, so you see, that's the qualifier, right? So now he can work backwards and say, okay, there's my impulse, right? Well, I can't have a 3 to start with, so it's got to be 1, 2, 1, 2. There's the 3. Okay. A, B, C into the 4. 1, 2, 3, 4, 5. So I got a big 3, right? So I got the big ripper here. So I can look at this and say, wow, that's interesting. So I've got 5 longer than 3, 3 longer than 1. It's not necessarily relevant per the same conditions of a diagonal, but interesting, right? Look at the kicker in the 5. Here again on a daily, you got to kind of work with, I can see, well, here's the B comes down for the 3. So I've got a 3 in here. And then, oh, lo and behold, I can get another 5 in. So I've got to complete it off of that low. It was kind of tricky to get there. And there could have been a whole number of areas here where you're like, is that it? I'm not sure. But as we sit here now, okay, so what is really, if I simplify the whole thing, right, which is what I try and show you guys, right? This is all the market ever does. Swing, retrace, right? And which side breaks, this side or this side, right? So that's all it ever does, right? Now look, you go, holy shit, man, that's a lot of complexity, but really, is it, right? Because what are we looking for? I got my 5 up. Boom, 3 down. Now, so I can look at that and say, okay, is this a confluence point? I mean, God damn, this is good work. So look at this. So look how perfect that is, that we nail that here. Now, oh, by the way, we got logarithmic golden zone. You see here, his colors are a little different than mine. Let me put that on here. So here we're, Jesus Christ. So we come from, oh God, this is so good. Damn, this is good work, pizza man. Okay, so look at this. So we come up here. This looks like this is a slight front run. This is his golden zone here, which I'm going to just change it just so you can see a little bit better. I think mine are just a little bit brighter. Okay, so you go, oh God, it just misses the golden zone. Wonder why? Well, could be this median line. That could be part of it. So we swing here. We come up here. This is the pivot here. It's technical, right? Often you'll find that these will get front run. That's close enough, right? I would call that a front run. I mean, it's right in the pocket, and then you've got the median line here. So A, B. Now I've got the 5. I'm just waiting for a 3. Now I get it that I completely see that you might have been thinking, oh, all right, it's done here. Oh, right? Is that? I mean, you could have, right? You might 1, 2, 3, 4, A, B, 1, 2, 3, 4, 5. You might have thought here it's good, maybe, right? You can see how you might. But I don't get a 5. So you see, so this is where the context comes into play. Oh, if it's A, B, C, and it's 1, 2, well, I'm looking for the 3 there. I don't get it. It rolls over. So immediately you got to say, well, that can't be it. So now you're kind of stuck with this saying, well, it's got to be something corrective. So all of this is just a big A, B, C to get us into the B here at the gold, front run on the golden zone. So we get that pattern here because I don't get a 5. So just process of elimination, it's got to still be corrective. So A, B, C. Now, if you just looked at that chart without all the stuff that's on here, that'd be pretty. In addition, look here, this is a low volume node. Right? It's all the pieces. I come back to this point. This is the fun part. Oh my God, look at all the shit that's going on right there. I got a log scrap golden zone. I'm at a median line. You see this here. I'm assuming you guys see that this is this right from here, right? So I get a corner pocket. You're not technically in the golden zone. So I get a corner pocket. I know I've got 80% probability of making the median line. Where does that pivot? It literally pings it. Still to this day, there are people that think that that's random. Oh, it's coincidental. I can't help you if that's what you think, right? I mean, I promise you that's not coincidental. Oh, by the way, it's a front run on the 50, right? So this is very common that you'll see this. You'll see, initial, because remember the algorithm starts buying at the 50. You get an initial reaction there. If it rolls over, where's the next target? Golden zone. That's what, so Jesus Christ. Do you see what happens here? All right, so we go here, we ping the median line right now. We could ping and go up here. There's all sorts of things could be happening here. But if we stay contained within this set of median lines I'm going to darken it again. Let me do that so you can see a little bit better. Mine are just brighter. That's the only difference here. So I come here, I ping it. I can't get any traction here. I ping it again. You see, the median line is a magnet to the market, right? And then algorithms are responsive there as well, right? So we see this. There's your 80%. Oh, now you don't maintain the 80%. So the fact that it pings down here it's not so much that it's coincidental, but you burn. So you wouldn't be right here going, oh, well, I got 80% odds that I get there again. No, it's just the 80% is on the first tag. Now, doesn't mean this is clearly a location that would make sense for it to roll over and go to. Let's just out of curiosity. My guess is this looks like it might be the 618 here. Oh, a little bit in between, but this is the golden zone that holds it. So we don't get the ABC quite as well there, but this, I mean, good God, you can't, as I will often say, I cannot make this stuff up. All right, so it looks like we're going WXY into a pivot here. Now, where are we? We're at a high volume node here. That's not the POC, is it? Doesn't look like it would be with that dotted line. I'm not sure what that dotted line is here. Let's zoom in there. Okay, so what has he got here? Oh, I see. All right, it's a little tricky for me when it's not my chart. Okay, so we get, you see, all right. So here's the first one, right? There's the 3. All right. Could we be done there? Absolutely, we would be done there. Well, then you say, oh, hey, I got it. I'm in my 1, 2, 3. Right, false, right? So it just process of elimination. Oh, well, if it's not going to be here, if it's not the ABC into my 2 and I take off from here, if I roll over again, well, there are certain places where it's just, you can't turn that into a 5, right? That's a 3 all day, right? This is another 3 and this is another 3. Right. So process of elimination, ABC leads to a W, ABC leads to an X, ABC. Right. I mean, at this point, that's what you're looking for is the ABC. All right. So he's going a little bit further. Oh, what did he send me? Did he send me the 4 hour? Let's see. Shit. What did he send me? He sent me, oh God, I can't even tell. I think he sent me the 2 hour. Okay. So I've got a candidate here for the ABC to have completed. Nothing more, right? So you see he's put the median lines here on the corner, meaning that I've got a candidate here for that 80%, right? It's not 100%, right? It's not 100%, but I'll take 80% odds any day I can get it in the market. So do I have an impulse here? Yep. I've got a complicated, you might look at it this way and say, well, all I'm really doing is just going sideways. So right off the bat, now that's already giving me information. Should this play out? Well, I've had a 1, I got a sideways 2. Now, if I get a 3 and I'm looking for that 4, what am I anticipating in the 4, right? Just Emphasis, guidelines of alternation, not a rule. It's a guideline of alternation. Well, I got a sideways 2. I'd be looking for a sharp 4. Doesn't mean that it must be sharp, but that's what I'm looking for. So if you're coming off of this corner, you can see how he's put the trade together. Okay, so first assumption is the pivot is in. So that's the only reason you would take that trade there, because you're making the assumption, oh, I'm starting now in the next 5 because I've got the 1, 2 in. I know I got 80% odds of getting there. I'm a little surprised he only went to that target, but that's all right, right? That's his plan. That would be, I'd take it right there, right? And get the median line, right? Get your 80%. Maybe that's what he's doing there. 1, 2, 1, 2. Let's go 2 hour. Okay, again, if you're looking for a trade, do you see how low the risk is here? Okay, that's the trade I keep telling you that's the one you want. Okay, stop here. Well, he's doing it even tighter than that. I'd put the stop here, because if it comes down here, well, everything is what I've deduced here as the potential 2. I'm going to take that up a degree. If I think this is the 2, well, either we're going to go lower here and that count all falls apart, and this ends up being just a big sideways correction. We're going down lower and something else is going on, right? So you got to rethink the whole thing. But as it sits right now, I've got a sideways 2. I've got a good candidate here for a pivot 1, 2. Now, if it goes, great, right? Low risk. The risk reward here is extremely friendly. What was he? Shit, man, this is really tight, Pizza Man, on your stop. Well, that's not bad, right? So he's using the 707. He's got, I think these are just his little lines. That looks like the POC in the volume profile, but nonetheless, right? So you could take this trade right here, right now. Nothing has really happened here to warrant, but do you note that, right? That's right from a golden zone. So if I go down, oh shit, here, let's go to a 30-minute. Okay. Again, I cannot make this stuff up, guys. Right. So we come here. I'm going to just change it to mine so it stands out a little bit better. Okay. Right. So look, not the 618 golden zone. Now this is a little skinny, but you do have a golden corner. Right. The skinnier they are, right? You want this to take a little bit longer. Ideally, you'll get a better target, but it's a golden corner nonetheless, right? Swing, golden zone, reaction. Do we have to discuss why that's got a reaction? I'd like to think not, right? So now if we're going to go there, if we're going to get it, right? So we have 80% odds of getting there. Well, could be here, or all we know is got 80% odds of getting there. All right, so if that's the 1 and we put in the 2, well, all the better, right? Because now I'm looking for the 3. Right? I know I have a clear target, right? It's not like I'm trading like, well, I'm kind of maybe, right? I got a clean target up here. 1, 2. Right, he's using the 707, right? Which is good, right? So if you don't want to give it all the way to the 707 is a good target. Square root of 50, right? Common, right? Algorithms will use it. You're just working off the little pivot here. So I would go a little bit below that if it's me. For the potential for that to ping down there and pop off of that support. It could do it. You lose the golden, right? But you have a corner pocket, right? So the emphasis is always that the pivot holds, right? That's what maintains the 80%. Now, you'd much prefer it to hold the golden zone rather than the 707 because you have an algo in here, right? This is not happening randomly, guys. Promise you that, right? So there's the algo responding, right? Now it will defend right until it breaks, right? But so it will stay here until it gets there. So 1, 2. So again, if you're looking for a trade, right? I mean, this is where I started saying, if you guys are looking for ideas about where to allocate some capital in trads, you're going to find some ideas here that you might like. I'd take that in a second. I always like to come back to, why would you not take that trade? Right? Golden zone. The TA is perfect. It's essentially perfect. Right now, you may have had some losers going through that because of the complexity of it, right? So it's a sideways combo. So we got a WXY, right? It's a little trickier because that first ABC, right? That's the one that's the fake out. You think, oh, it's going. If it doesn't go, you might have taken a loss there. Now, if you were disciplined about money management, you take a small loser. Well, welcome to trading. So, but it gives you the context. Because I didn't get an impulse in there, then I can deduce what's most likely going on. And indeed, right? If I don't get an impulse, then your first thought is, oh, WXY. So here's the setup. Here's the entry. You could do it with options. I buy in the money, right? So slightly in the money. So you're not just buying time. You're buying some intrinsic value. I know I got 8% odds of getting there. You don't, I mean, here, when we're on a 30-minute, you could buy a weekly option. I mean, it's not huge. It's not a huge move. I mean, put it in context, right? His target is way the hell up here. But if it's going to get there, right? See, if it's going to do it, it's going to do it. Here, let's bring all this over. It's not likely to do it in a straight line. Again, anything is possible in the markets, but is it likely to go in a straight line? Probably not, right? So if this is going to play, we've already got the 1-2. So we're now anticipating. Remember, if this is going to hold as the 1-2, I have to have an impulse in here, not optional. I have to have that, right, for this count to hold. Otherwise, you say something else is going on. Now, if you're not trading Elliott Wave, you don't give a shit. You're like, oh, all right, well, okay. No problem. We came up here, ran into some resistance here. Probably shit. There's an order block before it went down. You can talk yourself into all sorts of things. But if you maintain the discipline of Elliott Wave, you're going to be wrong. I promise you, more than you're right. That's the reality. Every trader has to be at peace with that. If you can't get comfortable with that, you're in the wrong business. You are going to be wrong more than you're right. Guaranteed. So what can we do to enhance our probabilities? And when we're trading and we are right about the direction, that we maximize the potential. Again, it's not that it couldn't go higher, but if I got here and I could count out an impulse, well, then you got to make the decision. Well, odds are, right? No certainty. Odds are this is likely to have another little correction. Now, do I want to give back 23% of my gains? Maybe I'm willing to do that because I'm so confident in the count that I'm willing to, if not only hold, but add to it because I'm fully anticipating the 5 completes here. So are you taking some risk here? Yes, you've got a nice win on your hand. What you're risking is that you give it back. All right, you started, you had a target, right? We talked about this a little bit yesterday. When you've got a winning trade that's underway, the hardest thing to do is keep your hands off your mouse. Oh, I got to grab it while it's there. Well, I got to grab it while it's there. Okay, well, if you get it here, it's not like you've got a bad trade. You got 8-1. But you're going for the tag of the median line, which is 26-1. So you got to decide along the way. If this is 1 and I'm looking for the 2 to come down here, right? Have things changed? Have things changed to where I no longer think that that's likely to get to that median line? Has something changed, right? That pretty deep retracement. Maybe, right? We got to rethink this. So maybe the 11-1 was good enough. Maybe you take the 3, you take a partial here. So, well, shit, I got 8-1. Am I disappointed? Well, I mean, I wouldn't be. If I get 8-1, I'm quite content with that. Okay. Oh, I got the 4 and the 5. Oh shit. Well, I was looking at something else. I didn't get the 5. All right. I completed an impulse. What am I anticipating next? Right. This is where the context matters. No, because if I got that, or just tee the whole thing out, right? This is the process, right? It's pretty good free draw. It's the same thing over and over and over and over and over again because, right? It's just over time. If you'll maintain the discipline, you're going to catch these. It doesn't take a lot of these to offset all those little losers that you're going to have. Remember, you're going to be stopped out more times than you're not. All those little, as long as you're not doing something stupid, like I'm moving my stop down here. Oh, I got stopped out. Oh, a little loser, right? Okay, there's the jab, not an uppercut. Okay, I got that. Now here, I can go again, right? So once you got something working and you're in tune, right, you can feel, it's almost an unfair advantage is often how I'll describe Elliott when it's playing and you're on it. And it's like, oh shit, I got the 5. Oh, holy shit, here comes the 3. What am I doing next? What's the first thing you're doing here? Holy shit, I got another golden corner. Right? So I know I got 80% odds of getting here. Now I could do it in one day. I could do it in an hour. Right? It doesn't mean like, oh, I'm going to get it way up here. It's just that it gets there. If it got here and I double topped, oh, well, okay. Welcome to trading. Oh, that's kind of complicated. Shit, what do I do now? I double topped here. Well, again, all right. So if this is 1-2, it's not likely to go to the 3 in a straight line. You'd be anticipating the 1-2. Right? That's the context I keep talking about. What happened last? What's most probable next? As opposed to, well, here's the support, here's the resistance. Shit, I don't know what happens in there, but I'm kind of watching those two levels. So what does that mean? That you sell at every resistance and you buy at every support? Well, some people trade that way, right? Quite successfully. It's just making a decision. Like, how do you want to approach the market, right? If you see value in this, right? If I hadn't, I promise you, there's nothing I haven't looked at. I mean, nothing. 30 years of doing this. Plus, I have a natural interest in it. There's very little I haven't looked at. I come back to this. I teach this. I built a business around this and a teaching business around this because I know that if you'll do this, your odds of being successful are much higher. But again, I take you all the way back to this is the fun part. Oh, can I solve that puzzle? Oh, fuck. I got it. What separates you from the trader who gets a hit, gets a loss, gets a hit, but is not consistently profitable is the discipline of the money management. It's this. It's not doing this. That's what separates the pro from the amateur. The pro, and you've heard me say this many times, you probably read this in 100 trading books, but it's reality. So when people like me keep repeating it, hopefully it sinks in. It's the discipline. There's the discipline of learning it, but this is what separates you, right? Do I do this? Oh, fuck. I know that's going to go higher. I don't want to get stopped out. The only reason I can say that is because I've done it. Many, many times I've done that, which is the only reason I can sit here and say, it's a discipline. It took me a long time to get to where because my ego was so involved. God damn it. I know that thing's going higher. I know it's going higher. Okay. It's a WXYXZ. I got it. I know what's happening. Oh, damn it. Now it's the trader's prayer, right? Oh God, get me out of this one. I'll never do it again. I'll never do it again. Why? Again, you just don't put yourself in that position, right? This is the key piece that nobody wants to really focus on because that's fucking boring. Come on, man. Let's get back to the puzzle. Oh, money management. Snooze. Yeah, I got it. Okay. Don't risk more. I got it. Okay. Right. Let's get back to the puzzle. All right. If you're trading this like a business, what is the professional concentrating on? How much I could lose? Because the professional knows he's going to be wrong when he's right. Not what is the amateur doing? Holy shit, look how much I can make. Whoa, I'm going to be rich. And I want it fast, right? Well, I probably age myself here, but the current generation of crypto traders, right? We want it fast. I want it now. I'm 24. I'm not a millionaire. What the fuck is wrong with me? That you could use that to your advantage, right? Because you know that mentality, particularly in crypto, you know that mentality is all over the place. So people are just going all in everywhere they turn. I'm all in on Doge. I'm all in on whatever the AMC, GameStop, right? There's certainly a lot of people have made an obscene amount of money, but can you do that over time, right? Is that something that's just unique to the time we're in, or is that a trading philosophy that can sustain you over 20 plus career trading? Can you sustain that? Can you recognize the difference between, this is a unique circumstance where we have this phenomenon happening in the market where we got short squeezes? Is this something that I can sustain over time? Can I build a trading career around this? I'll let you guys draw your own conclusions there. All right. God, I go way too long on these. Pizza Man, that's just fucking great work. Very, very improved right from when he first got to us. Okay. Let me, I go too long on these. Okay. So let me go to, what do I got here? Oh, this is another Pizza Man. All right. Good. Right, lots of ideas here. I would expect nothing less than what he just posted here. Oh shit! What did you give me? That's the image. Okay, let me get the working chart. Bear with me a sec here, guys. It's a little tricky to do this. Of course, every time I do copy save, I have probably 500 different templates because I have to save them. Okay, so same situation. I see where he is, but I can't figure it out unless I pull out on it. Oh, all right. Let's take a look here. I almost prefer that it comes up without the count on it, right? So that I can take a look at it. Now I'm like, oh my God. All right, let me get out to daily here. So particularly if it's an equity, I always start on the daily. All right, what are we thinking, Pizza Man? Let's see here. Well, we got some big range. The guideline is 3-1. It's definitely at 4-1. You might look in log. Maybe we don't have to. I'm guessing here you didn't send it to me in log here. No, you didn't. Okay, we'll stay out of log. If I recognize that I might want to go to sometimes going to log here it'll pop the count open to you because you just see a little bit of separation because of the expansion down below here. So it looks like he's done his analysis out of log. So I'm going to stay out. Okay. So let's see here. Where are we here? Oh, this is tricky. Okay. This is interesting. Let's go back even further. Oh shit. Oh, this is a doozy. Pizza Man. All right, let's look at this. I don't know what the asset is. LHA, I don't even know what it is. I don't need to know. I don't care. Now, if I was going to trade this, yeah, I would want to know. But to analyze the TNA, okay, well, so right off the bat here, okay, again, we're back to context. Okay, it's not an impulse. So okay, it's not an impulse. I can see that there's an impulse in it, but it's not 1, 2, 3, right? Now, this is the hindsight, right? So you can see, okay, right? So if I'm looking down here, I got to work backwards. Okay, where the hell are we? Okay, it's not an impulse. Not an impulse. Not an impulse. There's an impulse. Right? So you have some impulses in here, right? Here it is, right? So all of these ABCs have to end with a 5, right? Everything ends with a 5, right? That's rule in Elliott, right? You always are ending with a 5. You begin with a 5. Well, pardon me. There are circumstances here where you could have an ABC, but within the 3, there's going to be a 5. I don't want to simplify it too much. But what we can see here is that all of these impulses here that are coming down here. Now, here's the monster. You would definitely have been thinking here, oh, Derek, tell me what LHA is. I don't know what the hell this is. LHA is. I'm not getting it up here.
Okay, yeah, give me a second. I'll look.
If you can look that up, I don't know what the asset is. This is a really challenging count. Well, on the one hand, you could look down here, and if we want to simplify, all right, which I'm a big fan of. If I can, I will. All right. Well, what happened?
Lufthansa, the airline, Lufthansa.
Oh, okay. That makes sense. Okay.
Don't know how to say it, but German airline.
Lufthansa.
Yeah, there you go.
Okay, so the last time it got down here, what has happened historically? So right off the bat, nothing says it couldn't go lower, but wouldn't your first thought would be, well, okay, I can kind of see how coming down here might be an area to be of interest. I can see all the volume down here, so that a lot of that's going to be sell volume. So just working off of historical tendency, nothing more. Okay, well, we're certainly in an area where previously we can see that this is an accumulation area, and we can see the upside potential. 17 to 18, what a rip-roaring time that was. Well, here we come into the COVID low. All right, so let's go back to the daily. Now we have some context. Okay, so we're coming out of that last ABC, 1, 2, 3, 4, 5. Okay, so here's the 5 of that last 5. So 1, 2, 3, 4, big kick in the 5. Yeah, that's a pretty good rip. Okay, so he's got the value area here. He's added the lines here so you can recognize, okay, we're in value. So what he's done is use the volume profile to define the range of it. And what he's doing is this, right? So he's saying, okay, well, that was something weird. Something weird happened here. Now we come back into all of the value area here, right? So the market we have acceptance down here. Now look at the high volume node right here. So we have market acceptance down here. Now, of course, there is nothing that says that it couldn't go lower. But if you were picking a stop, wouldn't this be historically, it's never done it before. Right? It doesn't mean it couldn't do it now, but you might look at that and say, well, all right, that seems like a reasonable location to put a pivot for a pivot low. All right, can I get this thing started with a 5? This is good work, Pizza Man. This is tricky. So this takes a little practice, right? Okay, 1, 2, 3, 4, 5. All right, 1, 2, 1, 2, 3. This would be your 4. So if you're working backwards, you're kind of working back from that's likely the 4. Okay, 1, 2. So 1, 2, 3, 4, 5. So I have the requirement of an impulse in there. Well, this gets a little wonky here. It looks like he's working the triangle into the 4. It's a good call. A, B, C, D, E, right? E, very consistent for the E to underthrow in this case here. Well, we can just kind of look at it and say, all right, well, that was the support. Now, granted, I'm out here on a daily here, so could be this a little tricky, but can I finish it? Okay, if that's the E, 1, 2, perfect, right? So it's the test, right? So the last kiss before it kicks up. So 1, 2, 3, looks like you'd have to dig the 4 in here for the 5. Okay, so I got my 1. So what do I see here? I've got a completed impulse that gets me up here. Now, what am I looking for? I'm looking for 3 to correct it. Well, we got a pretty deep 3, right? We're coming all the way back. It looks like that's going to be 887. If not more, just out of curiosity, does he get 887 here? Let me go platinum. Well, there's 786, there's 887. So we're deep for a 2, but a 2 nonetheless. So right in here, we're between the 786, 887. All right, well, we're coming back to, I think now it starts to make sense. Why would he have done that? So here's the POC from this all of this craziness, up, down, which that's likely related to travel restrictions, right? So, okay, you can fly, you can't fly. You can fly, you can't fly. 1, 2, 3, 4, 5. I've got it. Now this gets a little tricky here. So right now I'm going to just take that up so we can see it a little bit better. Okay, so A, B. Okay, that works. So 1, 2, 3, 4, 5. I got my 5 down into my A. It's a little, well, you can see it in there. 1, 2, 3, 4, 5. All right, I got my A. Okay, that's what I'm looking. If I think this is the top, I'm expecting just what's the most common, right? A zigzag. So I'm looking for 5, 3, 5. A, right? A little skinny on the B, right? But enough, right? You can kind of look at it and say, well, does that make sense? Well, I know it's hindsight, right? It's always easy after the fact. Okay, well, I can lean into a B there. 1, 2. 1, A, B, C into the 2, 3. Where do I pivot? Right, golden zone. Right, so I get a reaction. I'm at the 65. It's trying, break. So, good example. I'm just going to pull that out for a second. So you lose the buy side algo here. So because of that, I'm going to take it off. Right, so we no longer have an algorithm here working with us. That doesn't mean we can't get one. To get one, you can see the way he's setting that up. We got to get one right here. That's what I just took off, which is what he's after. All right, if this is the 5, and that's a gnarly 5, right? I think I'd put it over here, Pizza Man. Oh shit! 1, 2, 3, 4, 5 into a double bottom here. It looks like that's a true double bottom. There's your little reaction. Now, do you know what he's doing here? How he's highlighting the value area? This is a nice touch. Okay, so we come right up to the value area high, which is in line with the A pivot. So we come up, right? Prior support becomes the resistance. Right? This is just a sweetener. Oh, I got the value area right over here from all of this shenanigans. Okay, I got the value area, boom, right, tags it. So we're coming down. Now, are we going down to the lower value area? Well, we could, right? Nothing says we couldn't, but look, we get this nice reaction. So here, where's the highest amount of trading take place? Down here, right at the POC, which is where I get that reaction. So I've got the channel here. Oh, let's take that up so you can see a little bit better. Okay, so I've got the center line of the channel, maybe, all right? I've got this set of median lines here. Oh, shit. Let's see, I'm going to just make that darker. Let's go here so you can see it a little bit better. Okay, so really, if you break it down, do I have the ingredients? I'm looking for a 3. Now, I got a big C wave here. Big C, but it makes sense to me. I can look at it and go, okay, I can understand why it would react there. I mean, you look over here, this is visible range, right? So we know we have a high volume location down here. We can look at probably the structure. Now there's a little bit of hindsight trading here. Oh, right. Well, I mean, would you be sitting here with a limit order? Probably not. Unless you're here because you want to accumulate. Okay, well, this is the accumulation range where it's accumulated in its entire history. Okay, well, look, boom, I got a reaction. Now, are you sitting down here with a limit order? Probably not. But if you got that reaction, you might say, oh, okay, 2. So where's the trade, right? You're trying to get, now you're going to have to clear this. You got a corner pocket, right? So you've got the potential, right? That's what you're after. So what's the risk reward on that if you're going to get the whole thing, right? You're trying to buy at the 2 here. Oh, I wouldn't give it. Again, the assumption is the pivot's in. right? Look at the reaction, right? So I'm making the commitment to the idea that that pivot low is in. Right? Certainly could go lower, but that's we don't get certainty. We just get probabilities. I'll come back up here. Let's take it up there. Okay, so there's 9-1. Do I know that's coming? No, I sure don't. I got earnings going to be right in the middle of it here. So as it sits right now, is there enough? Well, shit, let's go to a 4. Well, that would have freaked you out, right? So 1, 2 looks like it is. Yeah. See if I can get this up here. Bring you back. Well, that's a little gnarly, but you'd have to go with it, right? So this is the lowest low. So you have to maintain this as the pivot, right? So the assumption here, this was a wacky start. That's likely news driven here. So we've got a contender here. Is that done? Well, all right. So you don't know, right? It's hard to say, right? Because this is not much of a 3 to get us into the 2, right? So what you'd like to see, looks like I've got this channel center line here. That's channel, if I'm not mistaken. Yeah, it looks like that's channel rather than median line. So we've got this pivot here, and you look and say, all right, well, wonder why it stops there, right? Could that be why? Could it be because I'm just running into this prior structure here? Well, price action guy is going to tell you, yeah. Oh, wait. 233, right? It's very easy to go eye blind to the Vegas wave. You're just tagging the 233 here. Yeah, we got a little wick that goes through it, but you can kind of look at that and say, all right, if I was going to guess where the resistance was going to come in here, I'd want to include this pivot, this pivot, this pivot, and this pivot. Well, where do we go? Oh, I'd probably be eyeballing from up above. Remember, there's always an algo on the other side. Get back to here. All right, so there's the 50. I'd probably poke around here and say, are they reacting here? Looks like why would I pick that one? Because this one broke, right? So I can just look at that and say that's past the 65. So I know that this would have been the break. So you go back one. Now I look here right at the 50. Now I see you're kind of putting some pieces together here. Prior support. Now potentially the resistance. Oh, I'm right at the 233. This is a rocky start. It's always if this is going to make a trend change, look at the massive sell-off we're trying to turn around, right? This is the turn around the ocean freighter, right? I mean, this is a big haul to have that thing turn all the way around after all of this. My God, I mean, that's a long, right? Would we come from 13 to 7, right? So cut in half, really. 13 and change to 7 and change, damn near cut in half. So is this enough to do it? Well, I wouldn't have been down here waiting for that, right? I wouldn't have been with a limit order. I'd want to see that. And I want to see that come in a 3. Now, if that comes in a 3, what a beautiful, right? Now, of course, you're going to have to get through that, right? That could easily do that, right? It's another 3 and roll over. But you've got all the ingredients here. So I can see I've got 5 in there. Okay, 1, 2, a little tricky in here, 4. Okay, there's my 5. Oh, I should do it this way here. Let's be a little bit more precise about it here. So we don't have the overlap. So there's the 1. I was a little sloppy with that draw, right? So here's the 1. Jesus, that's close. But we don't overlap it. Here's the 1, right? So we get close, but that's the pivot high of the 1. We don't overlap it. So I've got my 4 actually in here. Got my 3 down here. I got all the ingredients. Note, Vegas wave, look where it pivots. It's easy, right? It's easy to not see it, right? You got so much shit on here. Oh, goddamn, where'd the Vegas wave? Oh, goddamn, it's right in the middle of it, right? It literally lipped it, right? And then now we come down here, all the way down here. I got the center line here. We're still going here. And this is just that's some sort of news took place here, right? You don't see that kind of reaction. It's very odd, right? So it opened, Jesus, that's an unusual wick, right? But nonetheless, right? So because of that, I'd be a little cautious in here. So I would really want to see a very clean, clear 3 come out of that. Then I'm okay, right? So this, you could just kind of look at that and say, well, I could see how that might hold it. Oh, coincidentally, right in line with the golden zone. But this is very common, right? Algo reaction. 1. Initial bounce at the 50 because that's where they start buying, right? Oh, sets up. Oh, now we can't get that high, right? Remember, a B is always a push to get the high that fails because they want to get the stops there. Oh, can't get it. Rolls over. Where's the next place the algo kicks in, right? So you can just kind of start to put the pieces together. Okay. Oh shit. I'm at the golden zone. What am I going to do next? Right. This is process. It's the same thing every time. That's the power of it, right? As soon as you start going, well, I don't know, let me get an Ichimoku cloud on here, and I don't know, I need a GAN fan as well, and I don't know, maybe I'll do some moving averages as well, right? As soon as you start tweaking with it, you're trading something else, right? And then not that those are necessarily bad things to put on your chart, but at some point you got to say, okay, that's enough. I can't take any more. Right? It's just paralysis of analysis. Oh, fuck, the Ichimoku chemo didn't roll over. Well, shit, I haven't passed the 200 yet. I'm not, at some point you got to say, okay, I can make a decision here. Because otherwise you can rationalize yourself in and out of anything. There has to be a process. Okay, process. Can I call that an impulse? Well, it's maybe a little stretch because you got to go 1, 2, 3, 4, 5. It's a little ugly, right? So if you're being selective, do I want that trade yet? Well, I don't want it here. Even though it's very possible the algo could kick and take it head right to its target, right? Nothing says it. God, I never get that on first click. Nothing says it doesn't do that, right? Where if it does that, where's the target, right? It's right in the middle of the other golden zone, right? And there's always an algo on the other side. So you're going to have from that pivot, there's going to be a reaction here. That's just the way it works, right? That's how they write the code. Now, that doesn't mean it can't get through, right? Otherwise, we just go sideways forever, right? Eventually, that's what you're looking for. There's the 3. We know if it pops golden zone, the negative 100, that's your proxy for the negative 1618, or pardon me, for the 1618. If I get it, right? 1, 2, 3, 4. Now I know where I am. Oh, good one. Oh, there's the 2, right? So if I get the 3, well, shit, I'm sure interested in the 4 and the 5. Boom, it's got my 80%, right? You could get it here. If it gets it here, are you sad about that? Because, I really wanted to get it up here. Well, you're anticipating. Remember, the requirement here is that I have to have 5 in there for me to plant the 3 on it. Okay, 1, 2, 3, 4, right? Process, right? So I have this. Doesn't mean that's what's going to happen. But now I've got a roadmap, right? Now, if that doesn't happen, okay, well, something else, right? What I thought was happening was going to be my impulse because I made a commitment to this low. Something else is going on here. Okay, well, if it's not this, then what? There will be a solution. If I get a 3, oh, well, sure, correction's not over. If I get there, all I have to do is break that high. No, I got a 5. Okay, so, oh shit, I didn't get it. I don't know. I wasn't there. I missed it. I didn't see it. Okay, does it mean you can't trade this anymore? Well, of course not. Oh, all you did was confirm I got a good pivot low down here. Okay, so what am I looking for now? Right? I got the 5, right? So this is where context matters, right? The whole thing starts to come together. Hey, I got the 5. What am I looking for next? If I get that 5, I'm just going to sit here and wait patiently, right? This is the other big mistake, but people are impatient. Oh man, I don't want to wait for that. What if it goes here? What if it's just a shallow 2, right? We see a lot of that. What if it's a shallow 2? Right? Impatience, right? So you force the trade, right? Almost always, if you force the trade because you're a little concerned, you might miss it. I almost guarantee you're going to see lower prices, right? Or higher prices, depending on what you're doing here. But if I get that, right? If I complete that, okay, now it gives you a certainty. Okay, well, I know where I am. Oh, what was I looking for? I was looking for an impulse. I got the impulse. What am I looking for next? Right? It's just, again, it's process, right? Same thing all over again. I'm looking for the 2. If I get the 2, right? If I get the 2, where am I looking for it? If I get that, what am I doing next? Right? You start to see how the repetition here, this is why we repeat, right? So that you do it the same way, because this has the same odds as that, right? Same. Now I'm looking for, right? 1, 2. Do I want to take that trade? Absolutely, I want to take that trade. Am I going to sit here with a limit order? No, because I know it's not going to go in a straight line. I'm looking for the 1, 2. Stop under the golden zone. 3, 4, boom, right to target. Right, so I got this because I know there's an algorithm sitting in there. It's going to take it all the way. If it can get there, right, it's going to defend here. That's really what we're saying here. It's going to defend here. It will take some profit here. Right, there's other targets, right? We've seen algos go beyond third target, right? Sometimes when if it's news driven or something's going on, or fucking Dogecoin or something, right? They'll just rip, right? We've all seen it. If you get that, right? Are you sad about that, right? I think not, right? That's, you don't have to get every piece of it, right? Something like that, or you probably get 8, 9 to 1. And that's just if you got that, is it done here? Well, of course, could be, right? But I got another 5. What am I looking for here? Holy shit, what do I got? I can do it again. Holy smokes, I can do it again. Over and over and over. Now, sooner or later, one fails, right? One's going to fail, and you go, oh, okay, well, something changed, right? It's a change of character, right? To bring in a little Wyckoff. Oh, do we have a change of character in the market? Am I still putting in higher highs and higher lows? Oh, I'm not? Oh, change of character. Does that mean that this could be just, here, I had a zigzag? Yeah, sure could. 5, 3, 5. Oh, if I don't get 4, 5, well, okay, process of elimination. Likely, I'm going to get this coming next. Context is everything. Otherwise, it's just chaos. It's just fucking bunch of lines. How are you gonna know what to do, where to do it? You literally could flip a coin. Heads I buy, tails I sell. Well, I'll draw some lines on here, right? And again, a lot of people trade very successfully just with support and resistance. I'm saying you could take it beyond that. I'm not suggesting you don't use support and resistance. I'm saying in addition to support and resistance, let's use some things that we know happen in the market every single day. This algorithm is in every time frame, in every asset class, period. I defy you to find me an asset where it's not there. You can't find it. They never turn it off. Always on, from the 30-second to the 30-day. Always on. Boy, I went too long on that one, didn't I? All right. Pizza Man, that's just great work. Right? I don't even have to check his stuff. Oh, Top Hat Panda. Oh, it's my favorite handle of all time. Top Hat Panda Magician. Okay, so let me see what we got here. He's given me, oh, fuck, I don't even know what it is. CLNE. Okay, what I'm doing here. Okay, so let's go here. Looks like we've got about 3, 4 more. Okay, so we should stay on time.
Clean Energy Fuels Corp, natural gas distribution company.
Oh, good. Okay, this will be interesting. Thanks for the heads up on what it is. Okay, this looks interesting. Oh man! All right, so right off the bat, all right, I'm already happy. I like so. Okay, so because I know some work went into this. Now I know Top Hat Panda is going to do the work, right? Because he's again been with us for some time now. Very advanced trader. He knows all of the detail about how. So most people look at that and go, "Holy shit, man. What the? Are you kidding me?" But see, there's once you understand it, the more I see, the better. But at first glance, like, oh, you got to be kidding me. Can I just do this? Can I just do that? That would be so much easier. Can I just do this? Right? That's easier. It is. It's easier. I mean, that I can't make that decision for you. I can just all I can do is expose you to this and say, let you draw your own conclusions. Well, I guess I could draw the lines. That would be a lot easier. But is there something I could do to increase my probabilities, my odds, my chances of success? Is there something I could do? Well, maybe I got support and resistance. Okay, I get that. I get that concept. It's not that hard to grasp. Okay, prior support becomes resistance. Okay, I got that. Right. Okay, prior resistance, prior support. Okay, I got it. Okay, what if I added like a little bit of geometry? I've been hearing about geometry. Okay, what does that mean? What is geometry? Well, I mean, you could define it. I mean, you use all of Gann's tools. There's a lot of geometry that's in the market. There's some people that trade with nothing but geometry. I will tell you here again in our order of priority. First, what the algorithm do last? Because you can't trade blind to that. You have to know what it did last, and where the resistance is going to come from that algorithm that they never turn off. Where's the geometry? Right now, we use channels and we use median lines. But I mean, to some degree, you could say, well, this vertical support. I mean, you can consider a channel just the same thing. It's just support and resistance. You're doing horizontally or at an angle. It's what a trend line is. It's a support and resistance line. This is a support resistance line. That's just we're doing it at an angle. So you could look at it and say, hey, ping, ping, ping. Well, I tagged that thing 3 times. I wonder if that's support. Well, certainly it could break. Now they said, I mean, it looks like he's got a scenario here where this thing could break. We can go lower here. You might do something like that. But right now, I can just look at this and say, okay, well, all right. Now, can I add in the Elliott Wave? And if I do that, is that going to add any value? Well, I can see the 1, 2. right? A little tricky here, right? Because that's so essentially what you're saying here is that this is oh shit. Well, we can't have a triangle in a 2, so you'd have to go with an ABC to get that 2. A little unusual, or you'd look for it a little deeper, but you don't get it. So odds are you're not sitting here saying, "Oh, I know right where it is. I'm buying it." But once it goes, okay. Well, that's not going to be the 3, right? What am I? I'm looking for 5 to come out. If I think it's a 1, 2, well, shit. Remember, I got to have a 5 in here. Do I get it? Can I count? We're on a 2-hour here. Can I dig down? Can I get all the subdivision in there? Can I get the whole thing to play? Do I get what I'm expecting? 1, 2, 3, 4, 5. I get it. Okay, so now I know where I am. Pardon me. I don't know for sure that that's a 3, but I've got a reasonable candidate here because it could be an ABC and we go down, right? You never know, right, until you get the 4 or 5. So what he's trying to do here is trade the 4, right? Here's his 4. Relative to this 2, well, of course, I'm sure he's got it in here, but sometimes it's hard for me to spot it. Right at the 50. Well, so he does have it in here. I just couldn't see it. Always easier when it's your own chart. All right, so here's the 50 he's got right in here. So it's a lot of complexity to it. But if you simplify it, what do we got there? Just another swing, retrace that break. One side's going to break, this one or this one. It's all the market ever does, right? That's simplify it. Now we got to look at this and go, holy shit, man, I got to go A, B, C, right? So there's all sorts of complexity in here, which comes from time and practice and study. God forbid you have to study something to learn how to make money. Oh my God. Top Hat Panda Magician has put the work in, so he knows how to read this. A. Oh, shit, that's weird. Oh, couldn't that be the A? Oh, no, because it doesn't play because I've got an impulse here. So I can use that as an expanded B because I can see. You see, it's this process of elimination. I got a 5 here. So it can't be that this is the A. Can't be, right? Because I got an impulse here. I got to account for that. So he knows to say, oh, wait a minute. I can complete the 5 here. That's a 3. That's a 3. I got a 5 here. So I can make that work. Right? This just comes, again, it's just practice, experience, posting a lot. Top Hat Panda, he's been almost on every one of these that we do. He posts a lot, so he gets a lot of value from his membership. I say, I got to account for that 5. How am I going to account for that 5 if it's 1, 2? I can't, doesn't work. What else could it be? Oh, I can expand the B and then use that as my C. Okay, so I've got A, and then I get another A here. Now I got this is really tricky, right? So this is not for those that have not studied, right? So now he's looking, so I can work a W because I can go A, B, C into a W. I can go A, B, C into an X, and then I can go A, B, C into the Y, which he has right here, right? So after all of that, we get the A is here, right? Because he had to go A, B, C into the A. The B is here, and now he's got the same problem here. Do you see why this is a really challenging count? So you look here and go, because you might think to yourself, oh, correction's over. Right here, I got it in. You could probably talk yourself into something like this. Oh, I'm done. Okay. Well, now as it's coming down, I'm looking for the 2. If you thought that, right? You might, right? You might have thought, oh, he had 2's coming in. As soon as you break that low, well, it can't be the 2. So you might have taken a loss here. Maybe you got a piece of that. Right? Maybe you got a piece of that impulse. And now if it's coming down, this is why you don't do this, right? This is a good example, Top Hat. So as this thing is coming down here, you might be thinking, oh, look at that. I got a golden zone, right? Oh, I want to buy it. I want to buy it because I've seen that's a area where the market's responsive, right? So I got a swing, I got a high, I got a golden zone. I did it in a 3. I want to be a buyer here. That's exactly why you don't sit here with a limit order. You wait for the reaction. And hey, if I get the reaction, I still could blow it out, but at least I've got a pivot here that makes sense to me. Okay. If I get the 3 here, I know where I am. I got it. But pauses, you get a little reaction because the algo is going to defend there. One side's always going to break, right? So it's not like if an algo's there, it's inevitable that it goes up to that target. Of course not, right? One side is always going to break, right? We go sideways forever. So 1, 2, it's a little funky one, but there's my 3. There's my 3, right? So this is really a tricky one because you have all these expanded Bs, right? So there's the 3. But really, what are we doing here? Right? It's just typical 4. We're not progressing the trend. We're just going sideways. One last little kicker down. Okay, did I complete the 4? Well, I've got all of the ingredients. Boy, a really tricky way to get there. But at the end of the day, how did you get there? You got here through this A, this B, and that C, right? But that takes a lot of skill to get there. That takes time. So I don't want you to think that, oh, well, I can come in here and, oh, that Trade Devil guy makes this stuff look so easy. It's just like, it's like a great athlete. You look at it and go, well, how hard can that be? They make it look so easy. Well, it's years and years and years of doing this. It's the only reason I shouldn't put words in mouths of people viewing. I don't know that I am making this look easy, but I can, it's probably easier for me than someone who hasn't spent 30 years studying this. Top Hat Pen has done the work here, so he knows how to deal with all the irregularities here. He knows how to do it. All right, so this is a skill now that he has that no one can take from him. Okay, could this be the low? Well, it could be, right? I've got all the ingredients here to get my 4. I had, well, let's pull back and say, okay, you don't get great alternation here. This, you'd call this sideways. This, I guess you'd live with it here and call it more sharp, right? Certainly more so than this. So you have alternation. We'll say it that way. All right, so can I get a 1, 2 and get out of here with a 3? All right, well, let's just dig in there and see how it looks. I know that he will have done all the work in here. Okay, 1, 2, 3, 4, 5. All right, so it's either a 1 or an A, right? So he also knows here that this can be a 1 or an A. Because we could go A, B, C, we could go W, X, Y, X, Z. We could fall over again. But do I have enough here to build a trade? Well, what's interesting here, look at this again, right? This is really great example, but what tricky, Elliott, right? This is tricky. So he's got to expand the B again. A, B, right? Because why does he have to do that? Because this 5 is down. You might have said, okay, there's the ABC. Okay, it's going to be a shallow 2, but I don't get a 3. Right? So process of elimination. If I'm not going to get the 3 here, if I'm not going to get the third, I should say, well, what do I get? I get a 3. Okay, well, if it's not going to be the third, what else could it be? I can see the impulse here, so I got to account for that. B, working on the C. So you can see his target down here. Let me take that up a degree so we can see it, right? You can see his target here. So if that's going to be the B up here, and we're going to have to expand the B off of this 3, boy, this is some very tricky, Elliott. Well, look what happens right off the bat. Down, pop. Where do we go? Golden zone, right? Doesn't matter. The asset doesn't matter. Time frame doesn't matter. They never turn it off. So what do I get here? Right. Well, I have. Well, you know, it's not that you have to always use a set of median lines. You could use a channel with it. Modified shift, just a channel. So I'm pinging off of the golden zone. I think I like the channel here better because if you were putting a set of median lines on this, it's going to be so skinny. You see how skinny? You're trying to get the correction here. You get it. And so you get this golden zone. Here's the target, and you get the lower parallel. Amazing, right? It still plays, right? So here, okay. If this is the B, what am I expecting? I'm looking for a 5, right? So right out of the chute, I got a 1. I couldn't script that any better. Oh, I'm going to get my 2 in the golden zone. Thank you very much. Yeah, I'll take that short. Do I have the 3 yet? Well, look, you see, remember, always an algo on the other side. So you got to deal with this algo that's going to be here, right? I'm going to just change this so you can see it a little bit better. I think mine are just easier to see. All right, so we're going up. We got the 1. We got an A, B. We're looking for that 5 to come down. Well, here's the golden zone right here. Am I going to get that reaction there? Well, he's got this identified here. I'll take mine off. He's got it identified. Here's that target. Oops. I can get that out of there. 1, 2, 3 could be. Now, so of course you'd be paying attention here. Am I going to get an impulse? Well, how do I qualify the impulse? Well, I got to use the 1 pivot, which is always a good habit to do this. Wick off the wave 1 low. 1, 2, 3, already overlapped. So that means that if this is going to hold as my finishing 5, if I'm going to come down to C, well, already, if this is 1, 2, I got to identify this as a diagonal. So 1, 2, 3, the shallowness of the 3, the fact that we don't make the 6, 1, 8, Oh, and you can see the channel here that he's put in as well, right? So he's just connecting these pivots with these pivots here. So I've got some geometry that looks like it's in play in conjunction with this. I know this is harder when it's not your shit's hard for me when it's not your chart, but when it is your chart and you drew all these, you kind of make sense of it. Okay, so if this is going to go as a diagonal, I'm expecting 1, 2, 3. Now, in a diagonal, we look for the reaction at the 50 to the start of this. So I'm going to take this one off just since we've already identified that as our pivot. And it's not that it must do this; it's just the most common, right? So we'd be looking for this at the 50. Would that make sense? Well, we can kind of look here and say, well, look at that prior support potentially there for the resistance. Doesn't mean that it must go up here. That's just, now look at the confluence you get right here, right? So we have this channel and this channel. If you go 3, if this is 1, 2, 3, if we can't confirm that yet, let's see what happens up here. Now, there's a confluence. This is exactly what we're talking about. I got a swing here. Remember, the algorithm it doesn't care that this already happened, right? All the algorithm sees is this. Okay, I got a swing high, I got a swing low, there's a 50, right? It doesn't care about that, right? There could be another algorithm in here. So all it cares about is that. But look at the confluence I get here. Geometry from 2 different channels, and I got a 50. And I'm looking for the 50 in the context of the diagonal that I think is going in here. I don't know. We think, oh, could that finish down here? Yeah, it could. 1, A, B, 1, 2, 3, 4, 5. I'm going to just change it just so you can see a little bit better. Right, there's the next 50. So this algorithm has a target right here, right in between the 2. If it breaks that, where's it likely to go next? Now look where we are right there. All right, this looks like, oh shit. I got to really pull back. Is that a median? Yeah, it looks like it's a median line. So we'd be coming into this median line right here as we hit the golden zone, as we hit the target from the algo that's here. I know that's hard to see, right? I can barely see it myself. If you got that, do you see the confluence point that would be here? You probably just pull this, get rid of that. If you hit it here, now, do you want to sit here with a limit order? No, we want to wait for that. And then that. And then that's what we're looking for. We want to always trying to get into the 3. That's the big wave, right? If I get this, where am I likely to run into some resistance? Well, I'm right back to the golden zone. You see, right? You kind of put that together and go, okay, well, until we break out of here, I'm just in a big algo box, right? I'm just stuck between 2 golden zones. Now, one side is going to break. And when it breaks, then I go, oh, okay, all right, 1, 2, I know where I am. Well, so if we pivot here, which high probability, well, now I have another set of median lines here. I have this red line here, so I'd have more geometry here. If I get that 5, right, again, and now I'm right back here, right, the repetition, there's back to the 50, right, because I'm looking for that 3. What's the first thing I'm going to do? Oh, I'm back at a 50 here. Maybe I get a corner pocket. Let's put that back in original. Right, now I got a new target. You see, the repetition of, oh, where's the 5? Where's the 3? Where's the swing? What'd the algo do last? Can I put some geometry on it? Is there geometry there to add confluence to it? If there is, great, right? It just adds a little bit more confidence in, hey, can I take that trade? Am I comfortable with that? Well, again, you don't have to pick the turn. Do not have to pick the turn. Take the little retrace that comes, right? Because if it's going to do that, it's not going to go in a straight line. It's likely not going to go in a straight line. So down a degree, you're going to have to get this. Right? There's going to be a little 5 in there. If that's done, and that's 1, and that's 2, well, that's not going to be 3. That's going to be 1, and then the whole thing starts all over again. Oh, 1, 2, right? What's the next thing I'm going to do? Right, you see the repetition here? 1, 2. Over and over and over. Because while you're going to get stopped out on many of these, it just takes one of these, and if you maintain this discipline, I guarantee you're going to get one of these that will run. It just will. It's just how the market moves, right? It's how the algorithms work. You're going to break one, and maybe you get right here and you say, well, wait a minute. If that's 1, 2, 1, 2, well, that's not going to be the 3 here. I know I got to have 5 here. So then you start to put these, remember, it's waves within waves within waves within waves. So I get another 1, 2, because I'm looking for the 3 over and over and over and over again. If you stick with this, I can promise you good results as long as you maintain, you don't do the self-inflicted wounds of like, oh shit, I don't want to get stopped out. All right. Thanks for that one, Top Hat. Good one. Very good. And just some brilliant Elliott work on a very difficult count. Oh, shit. What do I got? Do I have 2 from him? I think, what is this one? Oh, no, that's just, that's a lower time frame. Okay, so let me keep moving. All right, I got 2 guys, a couple of cryptos in here. I will circle back there if we need it, if we've got some extra time. So I'm going to go right to CZA giving me wheat. Now, we don't look at commodities as often as we should, right? So there's plenty of opportunity there. Now, when you're trading grains, you got to keep in mind that you're in very large part, while truly you are trading supply and demand, right? What causes these spikes are often weather, which is going to influence the supply and demand. So we are, I got to make a copy here. Let me keep going here. Wheat. Now, when I was a futures broker, I traded a lot of grains, right? So because people like to, it's a little bit of that lottery mentality. Oh, well, man, if we get a freeze this year, or, we got some sort of problem with the crops, right? Then, that's what creates these kind of things. Like the 07 wheat ramp. I got out of the brokerage business in 2000, so I wasn't there, but I know what's going on there. So can we put an Elliott count on this? Well, he's going very long term. So you're factoring in here. It gets a little trickier with something like wheat, where you're going between old crop and new crop here. So there's a little bit more complexity into it. But as we look coming off of this low, I guess I got to be in log scale here. Okay, we're in the cycle, 3rd wave. We should expect moon soon. Okay, so big expectations. He's giving me a weekly here. Okay, can we make sense of this? Is there any value in adding any Elliott here? Well, I got a kind of a funky start here, but it works. So I can go 1, 2. Well, I better check that. Let's just double check here. So I'm going to guess CZA has already done this. Well, we got a little, but she really kind of stuck with it here. So this is here where we don't, yeah, he did. Okay, so let me see this. Well, so right off the bat, so in a diagonal, in a leading diagonal like this, ideally you want 3 longer than 1 and 5 longer than 3. Well, we don't quite get it here. You get a very clear ABC, and this is really just a giant box, right, of going nowhere, right? It's just, we're 58 to, what's your low down here to 41, but this is just accumulation, right? You probably put some Wyckoff on this and say, okay, well, here I got, right? You maybe use this as your spring here. I'm not going anywhere, right? I'm just chopping in this range now. So here's a good example of what I try and tell you guys about breakouts, right? This is what retail does. Oh, we're breaking out. I want it. What's the first thing it does is come down, right? So that's why you don't need to do that. You want to wait and see if it wants to test all that. Look what it's testing here. Right? Is it safe? Right? That's how I often will describe it, because what they're saying, is a bunch of supply going to come in here or not? No. Oh, okay. Looks like it's safe. If you missed this one, well, I wasn't sure here. I don't know. I wasn't really sure. Well, right. They test it again. Now we're testing all of these, right? Is a bunch of supply going to come in here? Is it safe? Is it safe? Is it safe? Oh, it looks like it's safe. Well, I'm not so sure. Well, now we're testing all of this, right? Can it keep going? So this is stop, start. This is difficult trading in here. This is the kind of trading that you got to be careful about, because this can lead to emotional decisions. Oh shit, I thought it was going up and now it's going down. Well, I better sell it. Oh, but now it's going up again. I better buy it. You can get eaten alive in here, which is why in something like this, you got to have a long-term target, which looks like he does. Now we are out here on a weekly. So, let me just finish up here. So he's recognizing this. There's an imperfection here. Again, Elliott's not perfect. It's not always going to be absolutely perfect, but through process of elimination, you really don't have much else here, because they're such clear 3s, right? So you just got, this is such a clear 3, right? So what else could it be, right? You got the same thing here. Well, all of them, right? These are just all big 3s, right? So you're just kind of stuck with it. Well, it's like, oh shit, that should have gone more, right? But I can see that I've just got a series of 3s here. I'm not getting impulses out of this. So I got 3, 3, 3, and they're all kind of stalling up here at the same spot here. So if you're going to, either you just say, well, fuck, I don't know what it is. You got to call it something. Okay, well, while it's not perfect, even following that 3, I get another 3. Right. So there's really nothing else you could call it. So you're kind of stuck with the imperfection here of just the reality of trading. We don't get perfection. Elliott's not going to give you perfection, so don't look for it. But I can make a deduction here. Okay. I've got some sort of diagonal here because look, all the overlaps here. All right, now maybe I'm starting something here, but you don't know here because at that point in time, you'd have no way to know. We're not just going to do that. You have no way to know. So this was a rocky start. Now, once it starts to go, well, let's go down to a daily. Once we start to come out of this, I'm going to take that off. Okay, well, can I get something started here? Well, it's not ideal. 1, 2, right? So look at the 2 relative to the 4. It's not ideal, but you got to call it well, you don't have to. I shouldn't say it that way. If you're going to try and apply some Elliott, I'm going to see, can I get a 5 to work in here? Well, now here, again, you're a little bit outside of norms here. There might be I'm looking here if there's another way to count this. You see the problem here. So we've got a diagonal here, but we get a contracting here. So shit. Yeah. So 5 is shorter than 3. Looks like, let's check it here. Yeah. Okay. So 3 is shorter than 1. 5 is shorter. So I get a contracting diagonal. So I've got a candidate here. You wouldn't know for sure. And you might, at this point in time, you'd be looking here thinking, well, am I going to get a big 3 out of here? Well, this was kind of a rocky start. This has been a huge, to kind of turn the freight ship around. Like, can we turn it around here? A lot of stops and starts. Well, okay, at this point here, now we get to where it's relevant over here. Can I make this work? Can I get 5 into that? 1, 2. Let's see. Did we lose one here? Let's see. So this 2 is looking for, okay, so he's got his 3, 4, and 5 up here. Okay, all right. As often, you got to put them somewhere. Okay, so I'm going to take that up a degree just so I can spot it a little better. Okay, so 1, 2, 1, 2, 3, 4, 5. Okay, so since we don't get an impulse here, it has to be a diagonal. So the idea that we go 1, 2, 1, 2 makes better sense. And this, you'd probably have to do this as a WXY because at first glance, it looks like a 5. Oh, you'd have to go A, B, C, X, A, B, C into the 2. Well, let's just check that. Is it technical, right? So this is the same process, right? Even though we're focused over here, I want to see how technical has it been on the way up. Oh, pardon me. That's the wrong pivot. This is the pivot I want. Do you see what I just did here? So this is the completed impulse, right? It's right here. Or pardon me, diagonal, right? So this is the one wave, right? So if I'm looking for the retracement in the 2 relative to this one, because I'm going 1, 2, 1, 2, where does it go? I can't make that shit up. I can't make this up. I've never seen this chart before. Where does it go? Every market, every asset, every time frame, they never turn it off. Now, this would be a little tricky here. I would check both of them. Well, you already got it there. So it doesn't matter which one I use, right? If I use the dominant here, if I use within the Elliott count, right, the 1, 2, so to give me my golden corner pocket, I don't think I've done a live stream where I haven't shown this 5, 6 times, right? So you just miss here, right? But you get it here, right? There's your 80%, right? Now you're not to target, so we know there's an algorithm that kicked in right here, right? So the 80% is now burned, right? We don't get a second 80%, but we can draw a second one and get another 80%, right? Yeah, that looks like that's the low right there. So I got this target. So let's zoom in there a little bit more. So, okay, I see what he's doing. So he's going, if I'm reading his, yeah, okay. So here's what he's looking at. Okay, so we got potentially an A, B, C into a W. This gets a little skinny in here, right, for that X. And then he's looking for the A, B, and the C to complete that. Now, where is he looking for that, right? And let's put this back in mind. I can see him a little better. Okay, so he's looking for it here. Oh, and I would do it that way. So if this is A, B, C, we're looking for a new low here to give us the Y. I'll take that up. All right. So here's the Y he's looking for. So, I'm kind of making some assumptions here. That's how he counted it. I don't see a better way to do it. It almost doesn't matter because this is what he's playing right here. So if this is going to finish, it's swing, retrace, and we're looking for a break of this pivot to give us a new low. If we did that, what would the market have done? Right? It's just a different shape. It's the same thing. Swing, retrace. One side's going to break, right? It's all the market ever does. So if we come down here, this is what he's looking to play out, right? So this is a very disciplined approach, right? So if he doesn't get this, my guess is he's not going to sweat it, because you might say, Bo, ABC, we went in here, so this is the one. If you don't get it, because this is kind of I would put a regression channel on this and go, okay, can I break out of that? Well, I'm getting in and out, but that's 2 standard deviations. Okay, I'm back in. I'm right at the median, or right at the center line. So this is where patience is the critical component here to waiting for that trade. Because if it gets here and it starts to go a little bit, FOMO is going to kick in. Uh-oh. Right. If you FOMO, I can almost guarantee what'll happen. That. Right. This is, so what you're seeing here is a game plan, right? This is a trading campaign. If I get this, great. If I don't get this, okay, well, I'm not going to lose my shit over it. Okay, maybe I got a 1-2 and I get a 3. Oh, if I get that, well, if I were to get that, okay, so then you'd say, oh, turns out it's not a WXY, it's an ABC, or well, yeah, I guess likely what we'd have to deduce from that. Well, if it's 1-2 and I don't get this, and it starts to go here again, it's not going to go. If it's going to be a 3, it has to subdivide into 5, right? Has to, right? Or it's not a 3. So 1-2, 1-2. Oh, right. Prior structure, right? Right. We got another parallel here. Maybe it's 1-2, 1-2, right? 3, 4, 5. Oh man, I screwed that up. I didn't think it was going to get there. I didn't get it. Damn it. What am I looking for? Right. I got the median line. So the 80% realized, oh, I got a 5 in there. What am I looking for? Right now, shit, you could have a triangle, you could have all sorts of things in here, but you're looking for something that does not progress the trend. I had a sharp correction here, so I might look for something sideways here, right? Guideline of alternation. Not absolutely must go sideways here because it went sharp here. Just guideline. Oh, well, if I got a little triangle here, oh, wouldn't that be just perfect? Doesn't mean you will, but that's what I'm looking for since I had sharp here. But we don't know, right? So per his game plan, he's looking for this ABC to complete with a new low down here. All right, I'm just saying because I know CZA and he's now become a solid trader, that he's not going to sweat that, right? If it pings off of it, oh shit, I mean, he's already got it in there. You can see he's got the alternative ready to go. He's just looking for the corner here because I've got a corner target, right? Hopefully what you get from this is, Jesus, this guy does the same thing over and over and again. Yeah, that's the whole message. Nice work, CZA. High risk, high reward. If you get one of these, and it looks like we've got good volatility, if you get one of these, boy, they pay well, right? But the options will be expensive. The other thing you can do with assets like, it could be crude, could be soybeans, could be wheat, where you have a lot of volatility. You have events that can happen that are really outside. I mean, you have no control over it. Is you can hedge it, right? So if you wanted to buy this and I used to do this a lot when I was trading a lot of futures. If you want to get long here, but you're a little, I'm kind of uncertain. What if the weather changes or something happens, or some geopolitical shit happens? Because of the big upside, but also the risk that's there. So if you were, for example, if you're trading this with an option, that's going to be, likely you're gonna pay for that option if you're looking for 90 days, which I would tell you with something like wheat, you don't want to trade these short term. There's too much volatility, too much craziness can happen. But you could buy the futures and then buy an at the money put, right? So you're hedging against the downside. It's like buying an insurance policy. It's the same idea. I want the dollar for dollar gains of the futures. I'm willing to sacrifice with the options because I'm paying. It's not dollar for dollar, right? It's a reflection of time. It's all the value of an option related to time, intrinsic value, volatility, other variables that go into it. But that's a reasonable way. So you might say, okay, well, I'm going to long the futures, but because I know this is high risk, I'm going to long a put at the same time. Yes, that's going to take money out of your account to buy that insurance, but you're going to sleep better. And if you get this and it starts to go and you think, hey, I got a 3, I know I'm looking for the 4. Well, you could drop your put, take the loss there because you're going to have more profit from the futures than you will in the loss from the put. Okay, well, insurance, right? Every time you buy insurance, every time you send that monthly premium and you don't use it, are you losing money? Well, you're spending money. Same thing here, right? If you can, It's just a thought. I mean, you could, there's a lot of different ways you could do it, right? With options, right? You got all sorts of things. You could do a put spread here, and just so you're not so much out of pocket, put on the put spread. Now you'd have to take a little bit more directional risk because the futures, right, unlimited, but you'd have that potential. So it's just a suggestion because I used to trade a lot of this, and I would always say to guys, maybe just to hedge it a little bit because I don't want to see you blow up your account. Let's maybe we grab a put here. Well, so maybe you buy a 30-day put. So you say, okay, for the next 30 days, if I don't get what I want out of here, if I don't get this rip here, I'm going to rethink the trade. Maybe you drop the futures because the market tanks, and you're like, well, I'm glad I had that put. Well, look at all the money I made here because I'm now out of the futures market, but my put is deep in the money. Right? There's just a lot of ways to skin the cat here. It's good work, CZA. Oh, eighth and T. This will be an easy one. How are we doing on time? Shit, where are we at? Oh, 11:30 already. Okay, I'm almost done here with what we've got listed. Hope we got a few people still watching. All right, so what do we got here from eighth and T? Ethan T came to us. He knew very little about trading. Now, I use him as a great example because there were no bad habits to break. He came in just open-minded. Okay, I'm willing to learn. Boy, look at the work he puts up. Oh, Jesus, look at this. Oh, this is beautiful. I almost rarely do I have to even make a copy. His are so good. Okay, so coming off of the low here. So we're using the dominant pivot to give us this set of median lines here. Every swing's accounted for. 3, ABC into my 4, down to a 50. How beautiful is that? Okay, so here's the COVID low. Where does Blue Star Israeli technology? You'd think, oh, come on, man. It's not Blue Star Tech. What? I don't even know what the hell they do. Okay, COVID. Now, price action guy might say, oh, come on. I know why that happened, right? Prior support. Just a coincidence. Just a coincidence. I can't make that up, right? I just can't, right? That's not the 618 golden zone. Out of the golden zone. Pretty good 3, right? 1, 2. Do you see how he's got the 38 in here? So shallow 2, right? So is when the market is so artificially, right? Fed says game on, up we go. Okay, 1, 2. Excuse me. Where's the highest probability location for the 3 between the 1618 and the 175? So do you see what we do here? We go from golden zone to 1618, 175. Right. Again, right? And so here, right, here's our, if we're going to go 1, 2, 3, 4, well, this is a little wonky here but you've got the internal. So remember, I have to have an impulse here. Well, if I'm working backwards, that has to be the 4, that has to be the 3. This could be the 1, 2, right? Kind of a straight shot. 1, oh yeah, it looks like you could do it. 1, 2, 1, 2, 3, 4, 5. Looks like, yeah, you'd be able to. I guess you could do it here. I was just looking here. Would 3 be the shortest? You have to be careful about it. But you could do it 1 here. 1, 2, 3, 4, 5. 3, 6, 1, 8. Skinny, right? So I've got. This is shallow. This is a little bit deeper, but you can just kind of look at this and say, okay, right, remember we go down one degree to the 3, 4, right? Common retracement point, and this has got more legs. Now, this median line here, right? This is not relative, right? So this is not hitting an 80% because it's only. Oh, did we get it there? Shit, looks like we already got it. All right, can I open that up? Oh, it looks like it just missed. So we double topped here. It looks like it's just missed here. Okay, now pay attention here, guys, because this is okay. Look how many technical pivots we get here. In Blue Star Israel technology, I have exactly 0 idea what they do. None. Don't need it. Okay, what? So look, considering how technically this is traded, that we just had this, would this be a surprise? All right, so we've got the 3, we're looking for a 4. Really, what we're just looking for is a 3, right? That's all the market ever does, right? So we get that little 3 in there. I guess I can't, once I draw it, it's the thing. I'm going to see, I didn't make a copy of it here. I'm being lazy, but his work doesn't need it. Okay, so swing, would you come double top, right? We don't quite make the median line. What do? Right, we come down in 3. Right. Again, I've shown this so many times, right? I'm hoping that people are watching here start to go, Jesus Christ, I got to start paying attention to that. 1, 2, where do we do it? Golden zone. Now, it's a little bit, right? It's easy to go eye blind to it. Look at the Vegas wave, right? Right here, right at the 233. Oh, remember, I just say this over and over again. It's just like, they all start to sound the same. Well, wait a minute, right? Wait a minute, right? So if I didn't get this one, and you'll hear me say, well, okay, well, you don't have to sit there with a limit order, waiting to buy it, because you don't know what's going to happen there. When you get the structure here, okay, kind of makes sense. If you don't get the first one, what? Right. So if you're going to get the 3, 4, 5, right. So you can see his target, right. And again, this is the advantage of coming in, to an organization like ours without any preconceived ideas. A lot of people, we got to undo a lot of prior thinking. 1, 2, right. So where am I looking for the 2? If it's 1, 2, remember, I got to have 5 in here. So the first thing I'm looking for is the internal 1, 2, which is where it looks like he's already long. Where's his target? Now, note here that we have not yet officially pinged the median line. So I still have my 80% in play here. I still have those odds working with me because we didn't quite get there. Now, not making it, right, you got to be aware of trading principle number 4. Failure to get there sets up a move potentially, right, equal to or greater than the move that failed to get there. But what we come down, you might be thinking, oh, shit, man, we're going below. What holds it? Algorithm, right? Just software. Not some trader sitting there, come on, bring it in. I'm going to start to buy my 500 contracts right there. No, right? It's just software. What happens here? Software. I've shown it so many times. I'd like to think we don't have to review that, right? You got that part, right? At this point, I don't even know how many thousands of times I've shown it. So what's the requirement here? I got to have 5. So so you can see what he's done here. He's just said, okay, well, I know if that's going to go. If this is 3 and this is 4, and I got 1, 2, right? So there's no reason that you wouldn't think that. If that's the 1, what am I looking for? I'm looking for a 3. And it drops right into the golden zone at the 233. That's a trade. Oh, and by the way, look at the upside down and head and shoulders. Right, which he's just throwing in there just for good measure. Oh, hey, I got a head and shoulders. Right, but since there's no question that the Elliott is in play here, and it's not always right there. Charts, so shit. We looked at one yesterday. It was like, holy smokes, right? It was just 3s and 3s and 3s. Sometimes the Elliott is either not there or it's elusive, right? It's not always like, oh, all right, I got it. I can see what's happening. A lot of times it's okay, well, based on what I can see here, the most probable thing here, well, I thought that was the 3, went right where I would expect the 3. I got the third wave, I should say. Oh, I got 3 down into a 4, right where I'm expecting the 4, right at prior structure. Hey, what am I looking for? I'm looking for something impulsive, but I didn't get it. What am I looking for? I'm looking for a 3. Well, if I've got my 2 here, I must have 5 here. What do I get? 1, 2. You see, that's why I will often tell you that when the Elliott is on, right, when the market is it's an unfair advantage. Because what is the price action guy doing? Well, I guess there's probably some resistance there, and maybe there's a little support down here. And again, I'm not trying to disparage price action. I'm just trying to show you can go beyond price action. If you're not interested in doing that, well, I get you. Full respect, right? Not everybody wants to do this. This takes much more work. You got to memorize, you got to study, you got to work with it. How serious are you about your trading? You want to just come in here and, throw 10 grand at Doge or GameStop? Well, a lot of people have done that and have been well rewarded for doing it. Or are you trying to become a professional trader? Or at least, if not a professional, as in that's what you do for a living, as in I'm going to approach this with a professional mindset because I don't want to fucking waste my money in here. I'm not coming to have fun. I'm coming to make money. And every time I enter the market, I risk losing money. And that's not why I'm here. I'm here to make money. So wouldn't you want to incorporate some of this to improve the probabilities here? Some guy tells me I've got 80% odds and there's a red line there. If I draw that right, I got 80% odds of getting there. I'm interested. Now, if you tell me you got 50% odds, well, fuck, man, I could flip a coin. I got 50% odds. You tell me 80%, now I'm interested. You show me 10,000 times that where an algorithm participates, I'm interested. Wait a minute. You're telling me I can combine those two? Now I'm very interested. Wait a minute. You're telling me that I can put this in the context of a pattern that has repeated for, Jesus, when was Elliott writing? In the 30s? Since the 1930s? Pre-computers, pre-internet, and the same patterns are repeating over and over and over again? Yeah, I want to know about that. It's just how you want to approach the markets. All right, last one here. We'll wrap up. Holy shit, did I go long today? Okay, let me go. Eighthens are so easy. We'll just do one more. And if there's any requests, we'll look at them. Okay, I don't even have to do copies of his. They're so clean. Okay, so what do we got here, Ethan? This is, never heard of him. Pinned, he does come up. He must be using some sort of a filter that he searches with. Never heard of this company, Pinduoduo. Okay, well, so look right off the bat here. So again, nice detail work. So every swing, this one was very, see, he said, this thing with Ethan, I said, okay, I want you to account for every swing. So now he doesn't post a chart without accounting for every swing. Right? How do you want to get maximum value out of your membership? We're not telling you this for our benefit. This is for your benefit. I don't need to do this. I do this to try and help you guys. I got helped. I was lucky. I had some really good people teaching me, but not at first. It took me a while to find them, but I had some, a little bit of a give back here. They taught me. There's absolutely nothing I'm showing you here. Zero. Well, maybe some modification, but everything here I'm showing you was all taught to me. I'm just passing it on. 1, 2, 1, 2, 3, 4, 5. Okay, so I got a candidate here. Okay, could be. All right. Okay, well that seems to work. 1, 2. Well, I got to have a 5 here. I got to have 5. Can I get it? Oh shit, it's kind of squirrely, but I got it. Now this median line here is not relevant because it's not using any pivots down here. So it's only relevant over here. And he's using the big 1, 2. But so coming off of the low, oh shit, 3, 4. Oh, look at that, right? So up we go. What am I looking for here, right? So if I think that's the 3, or pardon me, the third wave, I'm looking for that 3 correction to give me the 4. That's what I'm looking for. What do I get that comes out of this? 1, 2, 3, sideways, right? Often, right? The 4 is just sideways. There's the 5. So what did I do here? I completed something because I can go 1, 2, 3, 4, 5. Something finished here. What am I looking for after this? Now this, right? I'm going to guess Ethan wouldn't have been able to do this when he first got here, but look at this nice work here. All right, he spots the triangle in here. So then we got the A. Then we got to go A, B, C, D, E. Tricky one. But it gets it done. So the B is right here. So we go A sideways, right? So it's just sideways. It's congestion. We're not going anywhere. We're just stuck in a box. Right? Can I get the triangle? Oh, hey, I got a candidate for a B. What am I looking for? I'm sure looking for a break of that low. Comes down. Now the pivot ends up here being at the 707, right? Square root of 50. But you can kind of look at that and say, well, I would not have been there with a limit order. I wouldn't have known to be a buyer there, but I see the reaction. It's not golden zone. So already I'm like, okay, well, but the ABC play. So I kind of understand where I am. This is a candidate, nothing more than a candidate for the 2. Could be the 2. I can see this. It's not the cleanest, right? It's not the, what we like to see is this, right? We don't get that. Well, it's a little funky. So this takes a little skill. Like, Ethan has had to study I know what it is. Triangle. 1, 2. Right. So again, I just say it over and over. So it starts to sink in. You don't have to pick this turn because you didn't know, right? You might have been thinking golden zone, shit, broke the golden zone. Okay. Well, that doesn't mean it can't be the 2, right? The 2 could go to the 8. Shit, it could go all the way down to here, right? As long as it doesn't take out the pivot low, it can be a 2 per Elliott. So from the low, I lost the algorithm. I lost it, right? We broke. Where do we pivot? 707, right? So it's another prior 3, 4, right? Area to be paying attention to for coming down. All right. Now that's, we're getting kind of on the edge here, right? So ideally 3, 4 here, but looking for that congestion area, this makes sense. Okay. Right. So we broke the golden zone. So I don't have this target in play. I don't per the algorithm. So how can I pick up an algorithm along the way? Well, let me take this off. Oh, shit. I think when I don't make the copy, I can't. Well, here I can show you nonetheless. I can only get one here. Right now, I'm getting a smaller one. I don't have that same monster target, but now I got one here. Now again, I'm always trying to tuck in behind them. They lead, we follow. Oh, there's a candidate here. Could it go lower? Yeah, of course it could, right? Could we bounce down here to the golden zone? Yeah, we could. Well, let's open that up a little bit. Do I have a 3 in there? Well, that's a little dicey, a little bit on the edge. You might wait a little bit here. You got a little baby 3. You're kind of in line with all of this structure here. So if it's me here, I would take a bite of it, appetizer size. I'd want to see this. Now, is it going to do that in a straight line? Probably not. Right? Even down here, we're on a daily here. You might go down to the 2 hour, 1 hour, 3 hours, something to where I can say, oh, do I have a 3? Do I have an ABC? Do I have a corrective structure here where I could long that? Well, here, this is going to be congestion. I can look at that and just say, well, that's going to be, all right, that's going to be some resistance. Why can I say that? Because the people that caught this are going to defend those positions here because they want it to go lower. This congestion here will be a factor because there's sellers here. They're like, hey, I was having a nice short going on there. I would use this just to check it. That's my pivot. When it gets right here, look at all that structure you're going to have to deal with, right? Doesn't mean it can't get through. Just means you got to identify, oh, well, let's see how it handles that. So maybe if I'm long here and I get here, at the very least, I'm going to have my stop at break even. Once I get about 1-to-1, right, of risk reward based on my risk relative to my reward, then I'll tighten it up. Now, not always to break even, but I'll reduce the risk. Why maintain the full hit, right? If it turns around, why take the full hit? But can I reduce it? Can I cut the risk in half? Well, now I'm really at ease, right? Oh, okay. If it comes up here, if it doesn't make it through where I know there's going to be resistance, well, that doesn't mean, oh shit, see if I don't copy it, I got to keep drawing them. Well, from here, right, if it doesn't make it through, then I got this one to deal with. Again, it's going to be on every dominant pivot. Right, secondary. I mean, you'd even have to check this, right? If it stalls there, because we're constantly looking what they use. Did they use that? Oh, there it is. Oh, it broke that. Well, you got to go back a pivot. There's the dominant. So this is the big hurdle it's got to get through on its way to get up here to some of those upper targets. If that is indeed a 1-2, right? So if that's a 1-2, look where his target is up here at the 1-6-1-8. So do you see how he's put that together? If this is 1-2, even though I'm deep here, I'm at a 707. So I don't have a golden corner, but I still have a corner. I have a corner pocket. I still have 80% odds of getting there. Right? Could be here, could be here. That could be 2024 before it gets there. Odds are, right, you're going to catch it somewhere in this range. Now, is that so? You say, well, all right, you got there. Why is your target way up here? Because this is a great example. So Ethan would be looking at that and say, oh, I made my 80%, but I know that if this is 1-2, there's a reasonable probability it gets up here. So you might take a partial here because at that moment in time, okay, we hit something technical. I'm at the golden zone here. I might anticipate that I'm going to get a little retrace on there because that's what the market is prone to do, not required to do, but prone to do. Oh, could I pick up another algorithm here? Oh, would there be a little structure I could play into? Could I add some more geometry? Could I draw another set of median lines? You start to see, oh, this makes sense. I see the repetition. Oh, I got it. Okay, 5 followed by 3, followed by 5, followed by 3, followed by 5, followed by 3. Where's the geometry? What'd the algo do last? You see the over and over and over again. You start to go, okay, I got this. I got it. Okay, well, wait a minute. What was that thing in the double, in the triangle, in the B? Well, that's why you come into an outfit like ours where we're going to help you understand it. First thing we're going to do is drop our Elliott Wave cheat sheet into your hands. We just give that to you. Here you go. All right. So if you're not sure, then you're flipping here. I've got them right. I keep them literally right on my desk. I go, oh shit, can I have a triangle in the B? Can that be it? Yeah. Oh, I can. Okay, good. And I put it down. Okay. So I can plant the B here. Or you could just draw lines. It's easier. We got anything else, Monty? I think I went over here.
No, we're done and not really have time for the cryptos, so I'll have them repost for me tonight.
Yeah, well, Oh yeah. So don't forget guys, you got my partner Monty Crypto tomorrow with you're going to see some really interesting geometry applied there, right? It's very unique and it's different to what you see from me. So we're giving you that variety, but I would tell you it's equally as sophisticated. It's just a different way of getting there. So tune in for that. I think it's all assets, any assets go. Is that right, Monty?
Yeah. Any
assets, right? So check that out. If you don't have time to watch the live stream, these are all recorded. If you're interested in more about us, as I remind you here, I save it to the end as people start signing up. You join us for free, right? You drop right into the Discord, grab that Elliott Wave cheat sheet, start to apply some of this. If you're like, I see the value here, but I need to learn a little bit more, come on in, right? You can join us for social. That gets you access to everything but the upper belts. If you're like, I want to dig a little bit deeper in all that geometry and how that algorithm works, and I want to get a handle on the Elliott Wave, and then you start to go into the belt system here, and we're going to challenge you along the way. The belt system is designed to be challenging. We're not doing it just so we can say, oh, hey, look here, we gave him a blue belt, we gave him a purple belt. Oh, good for him. No, that would be irresponsible of us. We're going to make sure that you have internalized it and you can execute it. You got to prove it, not just, oh, okay, I labeled the chart. No, can you trade it successfully? That's what the belt system does for you. All right, guys, let's wrap it up there. I think that I probably went too long there. Well, I got a lot out of 5 charts. Yeah. Okay, guys.
210. It's all good.
Appreciate you guys watching. And all right, you know where to find us. And always the link is underneath our little link tree, right? I notice everybody's using that now. It's a good idea. So the link tree is underneath this video. You can get to all of our sites here, either that we recommend or we have a relationship with, or sometimes it can be just a way to support the channel. So if that interests you, have a click on that. And just a reminder, you can join us for free. Drop in right into the Discord. We'll see you in there. Okay, guys, have a good one. We'll call it a wrap.
Yep. Have a good day.